Okay, I'm recording. So let's start. So we're gonna have a Q&A after this, right? Strength switching is not going to make or break your trading. Let me preface this by saying it's not gonna make or break your trading. This is just an extra concept that you can add to your trading that will ensure that you have an extra confirmation, right? So you need a strength switch when one asset is tweaking, right? Because strength switch allows assets to expand, right? So I always give this as an analogy, right? If you have let's say you have two runners in a race and they're trying to run a race and they want to reach the finish line at the same time, right? And one runner is faster than the other, then the faster runner will have to slow down while the slower runner will have to run faster so that they will go at the same pace and reach the finish line at the same time. This is a little bit about liquidity dispersal theory, which I'm not going to talk about. I decided to omit that from the lecture, so you have 2 pages missing. You guys are going to see 42 pages, but there's only 40 pages inside of this. So I don't want to be called a fraud. I just omitted it because Afiz already talked about it, right? So it's a little bit about liquidity dispersal theory, right? Where liquidity is injected differently inside the market. So sometimes NQ gets more liquidity, YM gets more liquidity, right? Or if NQ and YM both want to go to the same high and NQ is tweaking, it's just consolidating while YM is expanding, right? Actually, let's start the lecture by going into an example or something, I guess. Well, let's say NQ and YM want to reach the same high, right? This is NQ, this is YM, this is NQ. Like say NQ is low-key tweaking like this, right? And YM is up in this range and NQ is refusing to expand. At some point, you're going to see YM probably make a strength switch, which like it fills a gap while NQ doesn't fill a gap, and that signifies a strength switch, and that allows both of these assets to reach the high at the same time. And so that is basically when you need a strength switch, right? And it also allows both assets to expand. So we're going to begin by the types of strength switching that you're going to see, right? I marked the red line or the red any red confirmation as the strength switch in the examples that I'm going to use. So you have the first case, which is obviously using an SMT, right? So assume that you have a target here at the lows, right? You have both targets at the lows, and you want both targets to reach the lows, right? And first you have this where asset 1 sweeps out the high, asset 2 doesn't sweep out a high, right? Asset 2 doesn't sweep out a high. There's somehow a gap. The asset 2 doesn't sweep out a high. And therefore, this asset on the right is weaker and this asset is stronger. Now, when you want to see assets both expand lower, you need to see a strength switch, right? Because look at how this asset that is stronger is getting the stronger displacement lower. Therefore, it signifies that the asset that is previously lagging, as stated by it taking this high, is now weaker than this, right? And now, when you're going to refine this in the lower time frame charts, you are expecting this asset now, because now it is the stronger one there, you are expecting this asset to also expand lower. It's not just this one, right? And this is where APD sequence comes in. So a lot of people ask me why APD sequence works, right? And I explained this yesterday in my Q&A video. Say you have an SMT, right? So say you have both assets that are working like this. So you have both assets, right? Like let me use this instead, because this is what I used. So you have an SMT, right? Like this. This is one asset, and then the other asset will look something like this, where it doesn't take out a high and it goes lower. Now this is simply an SMT. It is not by any means a spaced out SMT. Right now, why do we demand a spaced out SMT? Well, imagine if the SMT that occurred between two assets, this is not a strength switch, assume that the SMT that formed between the two assets is like this. Now, when you are at the inception of this high, or while this high is still being created, right, it could easily just take out this high. It might as well just take out this high, right? Simply because it only takes so little effort for price to take out this high at the same time. Right now, that doesn't mean that we're not going to expand if we don't have an APD sequence. It just means that there's a higher probability of expansion with an APD sequence, because when you are this close to this high, it could take out this high easily, right? It could probably take like one more candle to sweep out this high. But if you have a spaced out SMT where it is something like this, so you see how spaced out this is? You see how much price has to move higher in order to catch up to this high, right? It's going to take so much more. And usually if it's going to break this SMT right here, then you might as well have this asset trade into a new relevant high or low, vice versa, basically. And so I don't like trading lagging assets as well when you have an APD sequence, simply because, as I stated, it needs a lot to catch up to this high, right? And this is where APD sequence comes in, right? If this asset that forms the failure swing SMT is somewhere in premium for longs, then you can long this because it's very close to the high. But if it's below EQ already, it's going to take so much, right? So that is why we need APD sequence, right? So coming back, this is the bearish example that I have. So you have the asset that sweeps out the low is the lagging because it is weaker to the upside. And now this asset that doesn't sweep out a low is leading because it is stronger to the upside. And now you have a strength switch where the asset that doesn't sweep out a low now sweeps out the same low. And this asset that doesn't sweep out a low, right? And you notice how much stronger of an expansion we need with this asset because this asset is lagging, right? So the lagging asset needs strength to compensate for its weakness, right? And so we have the second case, which is a small range and large range SMT, right? So you have the first SMT. This is for somehow inverse when I was editing it, but it's fine. So you have your first SMT. This right here is the lagging asset because this is a bearish example, right? This is somehow the lagging asset because it is the one that took out the high. As you can see, this is the leading asset to the downside because it is the one that took out the low, right? And so you have this asset right here. I wish I can draw, bro. You have this asset right here that sweeps the high, right? And now it is not sweeping out the high. And this asset that doesn't sweep out a high is now sweeping the high, okay? And so with this strength switch, you're assuming both assets will expand lower, right? Because you have this strength switch and assuming the framework is put in. We're not going to pattern trade strength switch in here, right? It is just something that confirms, as the title says, strength switching as confirmations. And so you have the large range into small range SMT, where this could be the 4-hour, right? And then you're having like a 15-minute SMT to kind of confirm your bias, and this is the bullish example that we have right there, right? Is that making sense for you guys so far? So this asset that is lagging is now temporarily leading, right? This asset is now temporarily leading, right? Does that make sense? Now, just because you have this strength switch, this asset, right, and even in this example as well, is momentarily going to switch to the stronger asset, right? But that doesn't mean that you are to trade the asset that is stronger now. It also doesn't mean that you want to trade this, right? When in regards to asset selection, you want to trade the asset that is the strongest in regards to the time frame that you are trading in, right? And so you see how even though if you want to trade this asset to like say these highs or this high, right, then you still want to take this asset, right? Now you want to take this asset still, even though it is the one that made the failure swing, SMT, right? Because this strength switch with the lagging asset is a temporary strength switch that allows this to temporarily gain strength and become leading. But if you look at the framework here, this leading asset that temporarily switched as the lagging is still above this low, right? Assume this asset is above this low. It is still the strongest in this entire framework, right? Now, if you were trying to kind of trade the lower time frame, like say you're trading in within these two candles, then you want to take this asset, because this asset, it is a momentary strength switch, right? So, but even though it is momentary, in this situation, this is the strongest asset, at least up until this high. Because if you have this signature, at some point while both assets are expanding higher. I'm sorry, this asset, they're both going to expand higher, right? And so while they're expanding higher, you're going to see another strength switch, and then you're going to see another, right? But ultimately, the asset that is leading will always be the leading, right? The strength switch doesn't change the fact that one asset is leading in one time frame unless you get a strength switch for that time frame as well. Let's move on. So this is essentially the same example as this first one, except this one is with an SMT fill, right? You guys are going to see real chart examples of these diagrams. And so this asset this is essentially the same thing, only that is confirmed with an SMT fill, right? And now, even though you kind of have this SMT fill, this is not necessary if you want to trade. This SMT is not necessary to trade the strength switch, right? But if you see an SMT fill like this and you kind of zoom out, you're typically going to see this signature anyways, right? You're typically gonna see this signature on the higher. But if you get this one stage SMT and both assets expand lower, then you don't necessarily need to mark out, or at the very least require this first stage, right? You can just take this because this is technically a continuation, and you only need a one stage continuation as long as both assets V-shape lower, right? That is the one scenario where you don't need a strength switch and all assets V-shape. And this is the this is a bullish example, right? Basically. So now this is essentially the same thing. This is my favorite model of all time to trade. This is my favorite model to trade. This personally right here is what printed me the most. When it comes to signatures, in my opinion, this is the highest probability reversal signature. It is when a PSP confirms the strength switch, right? And so notice how this asset sweeps out a high, but it closes bearish. And so you notice how this asset doesn't sweep out a high, but closes bullish, right? But since this asset is the one that swept the high, you would expect it to close bullish. And since this asset doesn't sweep out a high, you would expect it to close bearish. And so this asset sweeping out a high, closing bearish, showing you that this asset has momentarily switched to the stronger asset, and that is your strength switch, the PSP strength switch, right? I typically refer to this as SSPSP, which is a strength switch PSP, and this is the freest reversal model. If you spot this on the markets and you have your framework behind you, this will print you money, okay? So this asset closed bullish despite it not being able to take out a high. This is very, very free. I have an example with this later. And again, now you have this bullish example, right? Essentially the same thing. I marked this PSP red just to signify that the strength switch is the PSP. Again, now for continuations, this is my favorite model, right? This is my favorite continuation model. This works like this strike rate of this model is so high. This prints, bro. So again, in the continuation, right? Never mind that we don't have an SMT here. You can or cannot have an SMT here, right? You when you have an SMT here at the high, right? It only allows you to trade the high. But don't get into the habit of, okay, I cannot sorry, I'm stuttering. So for example, say you have price expanding lower, right? Do not get into the habit of thinking that price cannot expand lower simply because there is no cracking correlation at the high, because that is not the correct mindset to have. The market can reverse from wherever, however it wants. Having a two-stage at the reversal only allows you to trade the reversal, but price doesn't necessarily need a two-stage for the reversal to happen, right? So I get a lot of questions from people saying there was no two-stage at the low of day, so how can you say it's low of day? I cannot, right? I can probably expect the low of day to be formed there, But the two-stage at the reversal allows me to trade the reversal. But if there is none present, doesn't mean it doesn't quantify as a reversal. It just means it's not tradable. And again, even with this, right? If you have a gap and both assets trade into the gap, that doesn't mean that the gap won't hold. It just means you cannot trade the gap and you have to wait for another opportunity. And so here's my favorite model, right? Where one asset has a gap, right? And the third candle that forms a gap. So you guys know how a gap is formed. I'm not going to teach you guys what a fair value gap is. There's a lot of YouTube videos about that. You have the third candle that forms the gap is a PSP. So you see how the candle that forms a gap here is a PSP, right? And so it's similar to this one, right? Because the asset that sweeps out high is bearish, right? And so now this asset closing bullish. Now we can quantify this asset as the lagging, right? Because it is stronger to the upside, it is weaker to the downside, confirmed with this bullish candle. This is a bearish candle. You see how much stronger this asset is to the downside. This is the leading asset to the downside. But we get that SMT fill strength switch, right? Now the asset that is closing bullish doesn't take out the gap, but the asset that is closing bearish is taking out the gap. This is the freest model you're going to see in the markets. You can actually make a living off trading just this. You don't even need to trade the reversals. You just, if you find something like this, trade something like this, you get like 5 setups a week. You're banging, bro. So in regards to this, because this asset closed bullish, you would expect this asset to be the one to take out this high. And because this asset closed bearish, you don't expect this asset to take out the high, but the inverse happens, which means we get the strength switch, right? And so this is the bullish example. So now we're going to move on to the lower time frame, strength switching. Now this is a bit more, if you don't get the strength switch at the actual cracks in correlation, then you look for the strength switch on the lower time frames. So this is a bit of a stretch, right? You don't necessarily need this. This is something that confirms your bias, right? You don't go into the lower time frames and look for strength switching on the lower time frames to confirm your direction, right? Rather, when you see this essentially confirms the crack correlation that you get with here. So you see how it's actually in 2 slides because I couldn't fit both in one slide, right? Right, it's some water. So again, so notice how with this sequence, right, the asset that is making the SMT is closing as a PSP, but there is not a strength switch here. So let's go back to here, right? So here you see the asset that is sweeping out the low is closing bullish. This is a strength switch PSP because it swept out the low, but it closed bullish, right? But in this scenario, it doesn't sweep out a low. Compared to this, it doesn't sweep out a low, but it closed bearish. But in this scenario, it doesn't sweep out a low, but it closed bullish, right? So you quantify this asset versus this asset. This asset is clearly leading, right? But there was never any strength switch PSP, right? Because this asset closing a PSP still makes it the leading asset, right? There is no strength switch PSP just like this one to tell you that there is a strength switch. Now, let's move our eyes now to the lower time frame, right? Because if you see here, the asset that took out the low is also bearish, so there is never any strength switch with the actual cracks in correlation at the reversal. But you can kind of see this here, right? So you see how the asset that is clearly leading is having a slower CISD. So I want you to confirm this lower time frame price action to this. So you see how immediately after on the lagging asset, immediately CSD is higher, right? And this asset that is leading doesn't CSD higher in the same candle that this asset CSD'd higher. So with this lower time frame, you can confirm the strength switch. Now, this is why I say you don't necessarily need to view it from the lens of strength switching, but rather, I want you to view it as, in this scenario, all assets are V-shaping higher, and therefore, this is a very tradable setup, right? Let's move on to the next case. This is the same thing as this one. This is the leading asset, quantified by it's making the fair swing SMT, and it's making the PSP. Compared to this one, there is no strength switch at the actual 2-stage. So you see how this asset is consolidating, right? This asset is consolidating. Wait, actually, yeah. Let me get water. essentially the same, right? It's essentially the same as this one, right? And this, you got the lagging asset expansion, right? And so now for the next case, you have the gap size, right? The lower time frame gap size. I would never use a higher time frame gap size as a strength switch confirmation, simply because I only use gap sizing to measure strength when I am trading the lower time frame. So I only use it in the lower time frame, right? I'm sorry. So now you see that this asset that is making the failure swing, again, there is no strength switch at the 2-stage, but you see how this gap compared to this gap, right? This asset is clearly lagging, right? But you see how much stronger the lower time frame is compared to this one. Again, we need some sort of compensation for the lagging asset, right? And in this case, this asset is clearly lagging, right? You could have had the PSP as a strength switch, but it never did. Therefore, now it needs some compensation, right? Because if you want all assets to trade higher, this asset has more ground to cover higher, right? It has to expand more because it went lower here. It went below this low, therefore, it has to move more in order for it to reach the same draw that this asset is going to reach. And therefore, we get that compensation by this lower time frame price action, right? You see how this asset sees these immediately and we have huge gaps, while this asset it still has a gap, but it has this small gap and it's kind of having this lethargic PA, which is fine as long as both assets V-shape higher. Now, why do I need both assets to V-shape higher, regardless of strength switching or not, right? Because it goes down, it's like this, right? I'm sorry. That was my law book. So it goes like this, right? Let's move a bit higher here. It kind of goes like this. Wait. Let me get some water. Dude, my mouth is drying. We're coming back. So, again, here, you see this kind of lethargic PA, right? Now, why do I need both assets to V-shape, right? So, let me give you guys a scenario on NQ and YM here. So, you have NQ and YM, right? Here is one thing that cannot happen, right? If NQ cannot expand higher, say we're bullish, right? And we're trying to target this high. Just inverse this for a bearish scenario, right? And both are trading to this high. If NQ cannot expand higher, YM also cannot expand higher, right? And sometimes in the coupled markets, NQ will expand lower while YM will expand higher, and that is completely fine. You just cannot trade it, right? So the highest quality trades with the highest quality delivery and framework is produced when both assets can expand at the same time, right? So essentially, if NQ, like say you have a gap fill, right? Say you have a gap on both assets here. And say you have YM tapping into the gap and trading higher. You have NQ not tapping into the gap. So essentially, you kind of have that one stage gap fill continuation. You have that universal sequence, right? So say you have that universal sequence right there. If NQ or YM is just consolidating, right? If it cannot expand higher, first of all, if it's consolidating, we probably want a resweep, right? And if this asset cannot expand higher, this asset cannot expand higher. Think of it as a decoupled market, right? You want to approach the decoupled market and think of it as like NQ and YM is playing tug of war, right? And if your goal is for both assets to move in the same direction, if they are moving in opposite directions, then they're going to pull each other to the one, right? And so when you have a decoupled market like this, where NQ is trading higher, right, and YM is trading lower, they're basically playing tug of war, right? And the actual real true direction is going to be decided by which asset has the stronger pull, right? And how do we quantify which asset has the stronger pull? Let's say YM. Okay, let me bring back the labels. This is NQ. This is YM. Now, in a decoupled market where NQ is trading higher, YM is trading lower, right? So they both, so right now they're playing tug of war and they both have equal pull. Now, how do you know which asset is going to fall and follow the other? And that is why you need a manipulation. Actually, those are in the slides. I just thought about it. So we'll still do the diagram. Now you can quantify this by waiting for one asset to get a new phase of price. And what creates a new phase of price? A relevant level, right? And so if both assets are expanding, they are expanding to what? A relevant level. And that is why in a decoupled market, you want to wait until one asset hits a relevant level. So say YM reaches a relevant level, right? After it reaches this relevant level, it cannot expand anymore. It cannot expand anymore. And therefore, YM's pull to the downside is non-existent anymore. Unless this asset fails to manipulate, then it's going to expand lower. Then NQ probably is going to continue, right? But once it reaches a relevant level, the pull that YM has lower, right? I want you guys to just inverse this if there's a different bias. Sometimes YM is higher, sometimes NQ is lower, right? This is not a fixed scenario. I just want to illustrate this, just flip it for different scenarios. But if YM hits a relevant level, again, then it no longer has the pull lower, right? And so this is going to get a new phase of price, right? Yes, it is. Yes, it is recording. So now, with YM, it may consolidate, it may reverse, but either way, right, YM is probably not going to expand lower anymore, and that allows NQ to trade higher because if YM has hit a key level, say YM is bearish, NQ is bullish, right? Say YM is at a key level at the lows, right? YM has no more reason to trade lower, but NQ still has this open draw, right? And so therefore, in this scenario, NQ still has the pull upwards, right? And so in this scenario, they're playing tug of war, right? Higher, lower, higher, lower. But since YM already met its objectives at the lows, right, and NQ still has objective at the highs, then you have a scenario where NQ can still expand higher, right? But YM cannot expand lower anymore. Does that make sense? Right? And therefore, because this asset still has a pull higher, it's probably going to pull YM higher as well. And this is probably going to trade into this asset as well. And you have both objectives that are met. And you can trade this reversal with a strength switch. I have slides for that. I just wanted to illustrate that for you guys. I hope that made sense. I really hope that made sense. I tried to explain it in the simplest way possible. Right? So let's move on. So let's move on to the key levels for framework, right? This is the key levels that I want you guys to look for SMTs in, right? Because there's a hierarchy when it comes to key levels, right? I see a lot of you guys just blindly trading two-stage SMTs, PSPs, as long as there's a draw. No, it doesn't work like that. I see a lot of people trading, asking me why their trade failed when there was a two-stage and it's a pattern traded two-stage. I want you guys to remember that there's a hierarchy when it comes to looking for trades, right? The two-stage Kraken correlation and even the strength switch should come at the very last of your priorities. The first one should be the draw. The second one should be the profile and the wick size support the draw, right? And the last one should be, do you have the Kraken correlation necessary to support your trade? And so when it comes to the key levels for framework, this is the first thing that you should be looking at, right? These are the relevant levels that I use. I do not look for a two-stage unless there is a key level. I set my alerts at these. So first you have swings, highs, or lows. This is a relevant level that if price hits this, sorry, I have too much water. So if price hits this level, right, then this is where you could probably look for a two-stage because this is technically a reversal, right? So let's say you have like a two-stage PSP. Now you could trade this if it's a one-stage, if it's a fair value gap. Now this is just the bearish example. Now, this is when you can trade it as a one-stage only. If it is a lower time frame, if it is a fair value gap. And I explained this yesterday as well in my Q&A, right? When you can trade this, but I'll touch up more on that later. But for now, we're going to focus on this one specifically, right? We're going to focus on this one specifically. So say, because the second one is a gap, right? But a higher time frame gap is at the same time also a lower time frame swing point. So I illustrated this here for you guys. So you see how the higher time frame is a gap, but the lower time frame is a swing point. I want you guys to study this in your own time, in your own journals. Look for a higher time frame gap, and you see how the high of the gap and the low of the gap is formed from lower time frame swing points, right? This is basically this, just inversed. So this gap right here, the low of it is a swing point, and this is basically just a rate in the swing point. And when you trade this, you can just look for a 2-stage or something like that. And this is just a little diagram that I made. I already showed you guys this a long time ago. So you see how you're fractalizing price, right? You have a gap, and like say this is the higher time frame, like the weekly or the daily, right? This is the 4 hour or the 1 hour. This is the 15-minute or the 5-minute. So you see how on the higher time frame we have a gap that is a swing low on the intermediate time frame, and in that expansion higher, like say you missed this reversal, you can look for a universal sequence with this, right? So you see how price is fractals. Really amazing stuff, guys. So now I'm gonna show you guys a couple of examples when it comes to application, which is swing highs and swing lows. So again, swing highs and swing lows. So you see how you have this 2-stage, which is, it's basically just this. Where is it? It's basically just this, right? The asset that takes out the low, you already know. So I'm just basically applying it here. So you see here the asset that is taking the low is closing bullish. And so now this is your strength switch, and you're expecting the next candles to expand higher into this draw or a draw beyond it. And this is basically that with refinement, right? So you have this 2-stage with this strength switch, right? And you see this is the lower time frame. You need to wait for a CSD now to kind of trade this higher. And after the CSD, you're just expecting the next candles to trade higher as well, right? Again, swing highs or lows. You have the refinement right here. Okay, here. This is the sauce now. Asset synchronization protocol with strength switch. Now, this is what I said. This is what I said earlier. This is what I already discussed earlier. This is when assets are decoupled, right? And so the most common form of decoupling here is the 930 open on indices, right? But I rarely see decoupling when it comes to gold and silver and the oil triad, where I don't see them decouple to the extremes where one asset expanding in one direction, the other is not. I typically only see one asset expanding and the other consolidating, but they are almost never decoupled. So for this lecture, we're going to assume that the decoupling here is on indices 930 open, but this can happen with any pair, no problem. So there's more water in my mouth is dry. This is kind of the framework that we're going to be using, right? So you have asset 1, right? So for this purpose, we're going to use NQ and YM here because ES is typically never the lagging or the leading, right? ES is a byproduct of how NQ and YM move. So if NQ and YM are decoupled, ES is going to be fighting for its life. It's just going to keep on consolidating. It's not going to do anything, okay? So assume at 930 open, right? As soon as 930 open, you get that decoupling. So you see how asset 1 opens up at 930 and trades higher. Asset 2 opens up at 930 and it trades lower. And this is what I mentioned before. If both assets open and they trade in opposite directions, they're essentially playing tug of war with each other, right? So you see how this asset, it's pulling to the upside, and this asset is pulling to the downside. Now, when can you quantify that this asset can no longer pull to the upside, right? So, when you're playing tug of war and your opponent is stronger than you, then naturally you're going to be pulled in their direction, right? So let me explain further on this. This asset stops expanding higher when it manipulates a key level. So you see how I wrote here below, wait for either asset to manipulate a key level, and then you have a strength switch confirmation. There is no strength switch here yet. This is just the bare framework for the next slides that I'm going to be showing you guys, like right there. Okay, so what happens right? What happens when in tug of war, right? Say you're pulling against your opponent. What happens when you suddenly decide to stop pulling? What's going to happen to you? You're going to be flung to your opponent's direction, right? And this is basically exactly the same thing that happens here. This asset trades and expands higher into a key level, right? Now, what stops this asset expansion? This is the key level that we're using, this swing high. Because it hits this key level at the highs, we get a new phase of price. And therefore, it's going to stop pulling to the upside, right? And because it stops pulling to the upside, similar to the tug of war, what happens when you stop pulling in your own direction? You get flung to the opposite direction that your opponent is pulling you in. And so now, see what happens here? Yeah, exactly. You get yanked, right? And see what happens here. Because this asset doesn't have the strength to expand higher anymore, and this asset hasn't hit a key level yet. Notice how this asset hasn't hit a key level yet. So this asset hitting this key level cannot expand higher anymore, but this asset is not hitting a key level yet. So it has to expand lower still. It can still expand lower. And so this asset is pulling this asset into this direction. Right now, it's a different story when this asset fails to manipulate. Because if this asset fails to manipulate, then you have to wait for another relevant level, right? Or you need a strength switch. Okay, I hope that made sense to you guys, because that is the simplest way I can explain strength switching to you guys. Okay, so again, let me recap. This asset is sweeping out the high, and therefore we get a new phase of price, mind you, a relevant high. So we get a new phase of price, and if that new phase of price is consolidation or reversal, because this asset is expanding lower, it's pulling this asset, and therefore we're gonna have this huge expansion lower as well, and assets can resync, right? Because when assets are decoupled, right, either asset is just waiting for a key level to manipulate. So in this case, asset 1 is trading higher. They're decoupled, right? Either asset is just looking for a key level to manipulate. So say this is a different scenario where asset 2 manipulates this key level instead while this asset is consolidating. Then you're going to have the different story, right? You're basically just going to have this asset expand higher because this asset hasn't hit this high, right? This asset hasn't hit this high. So therefore, it can still expand higher. But this asset has this low. Has hit this low. Sorry, I'm speaking too fast. But this asset is hitting this low. So therefore, if we get a new phase of price, this asset can still expand higher. So this asset is going to get yanked to this high, right? So it's just the inverse example right here. This is bearish. This is bullish. So let's move to case 1, right? You see how this asset is manipulating this relevant... Oh, why did I say it like that? Manipulating this relevant high, right? Manipulating this relevant high. Well, this asset opens and consolidates. Now, in this scenario, there is no pull lower, right? But we are bearish in this scenario. You guys have to remember, we're bearish in this scenario. Assume that all framework is already here, right? Assume all framework is there and you're bearish. You have the asset, the open, that is expanding higher, right? Now, because it expanded higher, this is the leading asset to the upside. Now we get that strength switch, this candle SMT, right? You guys are going to see this a lot, right? I think Afiz was streaming when this happened. Actually, let's go find that in the charts. I think it was this one. NQNYM, I believe it's this one. Hold on. There's actually... I'm already showing examples, my bad. Okay, so I believe it's this one, and we expanded higher. All right, no, it's not that one, but Fees was streaming during that time. We kind of missed the longs because of that. Yeah, always pay attention to the asset that sweeps. It has to reverse as well. Dude, where is it? It's probably... All right, this is why I wanted to pre-prepare, but don't worry, the other examples are pre-prepared. We'll get to that. We'll get to that in a moment. If you guys know the date, just tell me so we can go to it. Actually, so let's just move on. We'll find the case later. Between those, they're like two NQ and YM. No. I noticed that sometimes RB is the middle asset typically, but sometimes RB can lead also. So I'm not too sure about that. But yeah, CL and HO are the ones that are decoupled most times, but sometimes RB also leads. So again, this is just a bullish example where the asset that sweeps a relevant level, we get that candle SMT, right? This asset that doesn't sweep, right? We don't get that candle SMT, right? So you see that. I really want to find that example, dude. Actually, so I can show you guys in the charts. It was like 3 longs, dude. Where is it? Oh yeah, we found it. It's this one. Okay. There we go. We finally found it. So pay attention to. Let's move to the 50-minute. Pay attention to the 50-minute time frame. Oh, I have both YMs pulled up, Loki. There we go. Pay attention to this 50-minute time frame. Let's say this 30-minute. So you see 9:30 opens up, right? Now in this scenario, assume we're bullish, right? Now even though we have swept both sides, we're still bullish. So we're only focusing. If you're bullish, you ignore any what's it called? You ignore any bearish cracks in correlation, because similar to PD arrays, if you're bullish, you expect bearish PD arrays to fail. If you're bullish, you also expect bearish cracking correlations to fail. And this is how you identify fake SMT, simply with just the framework, right? So you see how 9:30 opens up, and we get this move lower, right? So at first, you do kind of have this. There is no SMT with this low, but this is where you get it with this 2-stage right here. So you see how this asset is sweeping the low, and this asset is sweeping the low. This asset is not sweeping the low, and we get that 2-stage right there. It is not a strength switch, right? But we get that with the lower time frame instead. So let's have a look at this lower time frame. Let me show you guys this lower time frame. Even this wasn't even the example that I wanted, that where Aviz was low-key streaming. We'll find it later. But this is just one example that I know of. Okay. Oh, it was next day for him. Thank you for finding it. But we'll look at his example for now. Yeah, there we go. Okay, so you see how this asset is clearly weaker given by the fact that this asset is sweeping the low and it is closing bearish, and this asset is not sweeping the low but it's closing bullish. But look at where we do get that strength switch, right? You see how this asset that is weaker, quantified by the sweep and the PSP, is getting this faster CSD higher, right? Well, this asset, take note of the time it's CSD'd here in the lagging, 10:33. While at the leading, look at where 10:33 is. It's right there. You see how the leading asset hasn't CSD'd yet, but the lagging asset already has. So let's look at March 10. Right here, March 10. Okay, yeah, exactly. It's basically the exact same, what the hell? It's basically the exact same scenario. I found it. Hold on, guys. Give me a sec. March 10. It was right here. Longs were absolutely free during this day. Yeah, I got it. So here's the SMTs that we have. I'm just going to mark them out. This is exact. Okay, yeah. This is the what I wanted to show you guys. The exact scenario that I wanted to show you guys. This is the strength switch. It's exactly that example right there. Okay, I got it. So it's exactly this example right here. Yeah, it's exactly this example where you have one asset that sweeps, and then we get that strength switch with the SMT. It is basically this this large range and small range SMT. It's basically that, right? It's basically that here, except it is for decoupled sequences right here. So you see how, first of all, the framework here, the framework here, there is no other relevant level. If we are to trade higher, we have to reverse at this low. I have a friend that basically just souping these types of lows, but we're not gonna talk about that. So you see how this asset is considerably stronger, given by the fact that look at how much farther away from this low is compared to this asset that actually swept the lows, right? So if we are to continue higher, we have to do it here, and we get that strength switch. But notice how, as I mentioned before, this strength switch is temporary, right? This asset is still what's it called? This asset is still the lagging. The leading in the higher time frame. This asset is still the lagging, but you could trade any one as long as both expand, right? It also helps by noting that look at how NQ already swept this high, right? And so it is considerably stronger than YM, because if you look at YM is the one asset that is not swept this high yet. This high right here is this high on NQ. So you see how this asset is clearly stronger, and we get that strength switch right there, allowing both assets to expand, and we get that follow through with this CSD higher, right? Or trade both, yeah. So again, I hope that makes sense with you guys. You get that strength switch, right? So this bullish example right here. Now we have case 2 with the APT sequence, right? And so you have this 930 open that trades higher, and this 930 open that trades lower, right? This asset creates a gap while this asset is sweeping out the high, right? So you see a 930 open immediately sweeps out the high, right? But look at how we reacted after we swept out the high, right? So first off, we swept out the high, and then we get this SMT right here, right? Now, before 930 open, we already have this asset expanding lower, and therefore it is stronger lower. We already kind of quantified that before the actual open, right? And so now you do have this sequence, APD sequence, where this asset is above a high, this asset is in an SMT. As I said before with my illustration, look at how far this asset is to the same high that this asset took, right? It needs a lot of effort, needs to inverse a gap, it needs to expand so much higher for price to catch up to this high, right? Because it is so spaced out. And now notice how 930 opens and we sweep out the high, and 930 opens here and we get that we form a gap there, and the strength switch is a gap fill. So you notice how this asset is not sweeping out the high. It's the same example as this one, right? But this time this asset is in a gap, right? And this asset is not taking it. So this asset is lagging, this asset is leading, it has a gap, but this asset takes out a gap, fills a gap. But the gap high is this high on this asset. So this notice how I both mark them 930 open. So so you can classify them as which candle is which. So in this case, this high right here is the gap high. So we're getting that gap fill, while this asset is not sweeping the high where the gap is on the other asset. And so with this, as long as in the lower time frame you get that CSD, then you can expect both assets to trade lower into these lows. So same example, but for the bullish example right here. So now this is basically the exact same as this, but this is like the freest model of all time. But this time it is a PSP, right? It's the same one as this. Where is it? It's the same one as this, where the asset that forms a gap is a PSP, right? It's one of the freest models of all time. So here, it's basically the same thing, right? You have this asset sweeping. Now we do have that two-stage. Essentially, technically, we do have that two-stage from this high, and this asset that forms the high is already a two-stage, right? You can just expect this asset to expand lower, but it's even better because you have another gap fill SMT, and that is your strength switch. So see how you have two red marks here? The PSP here is your strength switch, right? So in this asset, you're getting this asset that is it is free money. Every model is free money if you know how to trade it, but this one is my personal favorite. So again, notice this sequence, right? The asset that takes out a high is closing bearish. Now, this asset that is not taking out the high is closing bullish. We just took this one step farther and we added a gap. We have this sweep inside of a gap, right? Sweep inside of a gap. And then we get this sequence. Now, as long as both assets CSD here as well, and you kind of have follow through following this kind of signature, then you can expect both assets to trade lower. Now, this exact same example, but this is bullish. I want you to note that these examples that I gave you guys right here, when in regards to lagging assets, not lagging, sorry, in regards to strength switching, this is how you trade the reversal with the strength switch as your confirmation, right? So all of these are reversal trades. If you can see, all of these are reversal trades. Now we're going into the lagging asset. Now, a lagging asset in a term is a continuation signature, right? So the lagging asset is technically a continuation, right? Because you have this already put in reversal, and now with this lagging asset, you're expecting this asset to also hit the same high that the other asset took, that the leading asset took. And so trading the lagging asset, very straightforward. You wait for one asset to hit a high. You wait for one asset to hit a high, and then you need a strength switch. So you need the asset that hit a high to sweep a low, if that makes sense. And then you need the asset that hasn't hit the same high to not sweep a low. And in this case, the low is a fair value gap. Now, this is very straightforward. This is how you trade a lagging asset. So you see how this asset sweeps out this key level, and it is filling this gap. So again, we have discussed earlier that a gap fill can be a form of a strength switch. Now, in this case, it is a strength switch because it already hit the high. So because it hit the high, you can quantify this asset as the leading. But now the leading asset is making the gap fill, while this asset that hasn't hit the high yet, which is obviously weaker, is not getting the gap fill, right? So now it is stronger in this price signature, and now you can expect this asset to trade into the same high that this asset took. Same exact example, but bearish. Now, even better example. Again, this is my favorite model, is if the third candle that forms the gap is a PSP. Now, this is the exact same example as this, only the asset that hit the high is the one that is creating a PSP. It's basically the same thing. PSP into an SMT fill. As you can see, same example right here. And then the last example is the lagging asset with an SMT, right? So you have this sweeping out a low, but it closes bearish. Now, this is the exact same example as this one, where the asset that sweeps out a high, right? The asset that sweeps out a high is closing bearish. Now, we just added context to this. Okay, so the asset that takes out a high, again, we have quantified this asset as the leading because it already hit the key level. But now we're getting this strength switch where the asset that is leading is sweeping a low and creating a PSP. Well, this asset that hasn't hit the high is not sweeping a low and creating a PSP. Now, in this scenario, even though it is just a two-stage with no, if you look at just this scenario, without looking at the framework, this is simply a two-stage. There is no strength switch in here. You have this strength switch because you identify the asset as the leading via the asset hits a key level. And so now you have this, and you're expecting this asset to also catch up to the same asset. Okay? Now we just added context to it. Same example, but bearish. So now we can get to the examples. I'll get to your guys' questions later. Now, after this, I'm going to stitch a lot of examples. We're gonna go through examples, but after this, I'm going to stitch a lot of examples as well. Before I upload it to YouTube, so you guys have a lot to study about. It's just that I have to edit it and I have to stitch them together, but it should be up within a day or two. So again, here asset sweeps out a high and trades lower. Right now, you actually have context to trade this lower. So now we can finally get into some more examples. You have one example right here on NQ and YM. Now I took this, all of these examples are trades that I took. So first you have this SMT fill. This is how I long this asset. Now this is not a strength switch. And again, this is a situation where you do not need to require a strength switch, because if you look here, all assets are expanding higher. So you see both assets V-shaped, right? Both assets V-shaped. Now, you cannot... Dude, my throat is bugging. Now, I want you to kind of notice here. YM is considerably weaker in the range, right? So if you see these lows, right? Look at the lows in the daily on NQ, right? Look at these lows, the August lows. Well, actually, yeah, they're farther away. But look at them. Actually, I shouldn't have brought that up. I was thinking of a different example, sorry. So you see how much deeper we are to the daily wick with YM? Yeah, why are they inverted? You see how much deeper we're digging into the wick, right? So you see how YM is clearly below EQ of this wick. Now, this is just for measuring purposes. You do not need to measure it like this, but I want you guys to see how it works, right? So you see how YM is considerably weaker in the range, NQ is considerably stronger in the weekly range, right? So we have quantified that NQ is stronger to the upside, right? But now if you look at this, NQ that is stronger is now making this gap fill, and that is strength switch in a way, but there's no actual strength switch, right? The strength switch here, right, is this gap fill, but you need to know the framework to know that this is a strength switch. You could have traded this without knowing that, because it is simply a universal model. Now you have the gap fill, you have the follow through where both assets are CSDing higher. Now I wouldn't take this CSD, this 530 CSD, because if you look, we have a the 4 hour was still huge at the time. Where the hell did the candle go? So look at that. It is the 2 a.m. candle, 4 hour. See how large this wick is, right? You can never, yo, what's up, Seth? You can never trade an asset with a large wick, right? You cannot fade this. You can fade this, but you need to have your stop at around below EQ. Now, you don't want to take that. It's simply easier to wait for 6, simply because we're also just kind of consolidating here. So I waited for 6 before I took this trade. So as you can see, 6 a.m. opens. We trade higher. And I took NQ here. Now, why did I take NQ even though NQ is the one that filled the gap? Now, I mentioned this before, right? You do not want to just blatantly take the asset that is taking the low. Or what you don't want to just blatantly trade the asset that is weaker or stronger with the strength switch, right? Yeah, because it's leading, exactly. So again, you see how NQ is much stronger in the weekly range, right? You see how NQ is much stronger here, right? You see how NQ is barely just below that, while YM is already expanding below it. You could have at one point expected YM to kind of trade through this. I actually think Sunday would just gap up below here, but anyway, let's focus on NQ. So NQ is still stronger. Now, I took NQ here because I am trading in the framework of the intraday. And intraday, NQ is stronger. Now, if I were to trade this and my target would only be something like these highs, or maybe even like something like this high, this high, this high, I would take YM. Because YM is the stronger asset, right? And so I took this. I think I took the 5-minute close, actually. Yeah, I took a 5-minute close. Right at 6. It was somewhere around here. Stop below here. And I TP'd at this high. Was it that high? Or I'd say TP'd at the 1 hour high. Somewhere right there, and I held some runners to this high. Yep. So that is your example. Now, on oils here. Okay, yeah. Where is this trade? Okay, yeah. So here, as you can see, right? So the framework behind this trade is that if you look at, I already gave my recap to Lazarus on this. So you see how we're just expanding higher, right? And there's no other key level. Now here's where sequential SMT comes in. If there's no other relevant level, you can use a 4-hour high, a 90-minute high, and a 6-hour high. You can use the 1 hour, but I personally don't. When it comes to candlestick SMT at an area where there's no other relevant high, so you see how in this area it's just a dead zone. There's no relevant high they could trade into. I don't care about this gap. I don't look at a gap like that. I don't use random gaps. So the only time I would use a 1 hour high for a resweep or a relevant level is if the 1 hour trades like this, and then we consolidate. This is when I would use the 1 hour high as kind of that sweep. But now, since there is no relevant level here, you could use the 90-minute, you can use the 4 hour, and you can use the 6 hour. In this case, I use the 6 hour. So notice how Ajo. Yeah. So now I want to trade this back into the retracement because we have consecutive candles of expansion. And so in this case, again, I mentioned that this high is now my relevant high. So we have a sweep of the relevant high between CL and Ajo. So you have that SMT. Now let me pull up double charts for you guys. Hold on. Yeah. Now the strength switch here is in the 50-minute, the exact same framework that I gave you guys. Right. So it is this framework right here. Where is it? It is this framework right here. So you see how the asset that sweeps out, the asset that sweeps out a high closes bearish, doesn't sweep out a high, closes bullish. That's your strength switch. So you get that exact scenario here. Ajo sweeps the high, but it closes bearish, right? And CL doesn't sweep out a high, but close bullish. That is your strength switch. When you see this, this is so free. Now, ideally, you take the CL here. I was watching this in real time. I wanted to wait for this candle to close, and I would take any CSD. I don't even care if it closes somewhere in here. I would have taken it, but it just flew. I could have taken the 1 minute, but I didn't think to look at the 1 minute here. Right? This is kind of your only entry. Yeah, where did it go? Oh, what the hell? All right, there we go. This is your only entry, right? So you couldn't take this CSD. Now here's the thing. If you want to short in premium of the current range you're trading in. If you want to long in discount of the current range you're trading in, unless you're trading a continuation range. Right, but even then, you want to long in discount, you want to short in premium, right? And so I'm not shorting after this 3 hour candle close because my TP was like this low. And so it's probably not even going to give me 2R. To that low or something. See? And also, if you look at this range that I am trading in, this 15-minute range or whatever range, right? It's already crossed EQ, right? You wanna short up here, not down here, right? Because when we get down here, and this is something for you guys to study, right? Look at the range that we're trading in, right? Look at the range that we're trading in. Say you want to short. Now, in a bearish scenario, when we cross EQ, that is when you get deep retracements. Before EQ, you're not going to get deep retracements. You're going to get breakaway gaps. But as soon as you cross EQ, you're going to see gaps get filled, overfilled even. Like it's going to shoot up by a bit more. You might even inverse some gaps. You might overshoot a bit by gaps. You might get some deep retracements. But the lower you are in the range for bearishness, the higher probability that there will be a deep retracement. And so I couldn't take CL, right? And I couldn't take RB because RB was also way too far gone. See how low that is? Like compared to this range, we're basically already near the target when this kind of happened. Right? And so, Preston, dude. So the only asset that I can take here is Ajo, this 3-minute CSD. Now I can take this because again, I want to short in premium. No, my stop was here, so I can get 2R. So I want to short in premium. So I'm still in premium of the current range I'm trading in. This asset is the only one that is still in premium. Now I can short this because all assets V-shaped. So notice the 1 a.m. 3-minute candle. HO V-shaped, RB V-shaped, and CL V-shaped. Now, because every asset V-shaped, you can trade this. Now, because technically this is a lagging asset, it's gonna have low probability of hitting this low. So I would TP when CL hits this low. Right now, luckily CL didn't hit the low until like HO hit the low. So I'm fine with that. Now I actually got like pump faked here. So my stop was around like 400 points. I saw this go like 500, 600. No, 500, 550. But it never stopped me. So got kind of lucky in that one. Got blessed. So you see how even though it's a lagging asset, we still get that draw. Right? So moving on to the next example. Now I made ladders do a case study with this. Hope you guys still remember this case. Now this is a 2-stage, right? But the strength switch here is the actual trade. It's the framework is telling you that you needed this strength switch, right? So let's go on the daily first. So you notice how YM is basically trading at equal highs, right? YM is trading at equal highs. I mean, no, equal highs. I'm sorry. All-time highs. YM is trading at all-time highs. So it is clearly, on the daily, it is clearly the strongest asset. So you see how NQ is like way below this? And this is what I'm saying. Even though there is an SMT right there, I'm not expecting NQ to trade back into this simply because look at how much farther it is. It's gonna take you like a week or two if you wanna reach to that high. Right? Sorry. So we have established that NQ is the lagging asset to the lows on the daily time frame, right? So NQ is considerably more bearish than YM. So now if you look at the hourly, we get that 2-stage, right? Now YM, the asset that is strongest, we get this 2-stage right here. Now this isn't even that yet. So you see how we get this huge expansion, right? This is your first signs of strength switching. This asset that is the strongest to the upside, that is the most bullish, we get this huge expansion lower, right? That started at around 8 at Tuesday. But look at what kind of expansion we get here. We get this lethargic, non-existent expansion lower. So YM, the asset that is basically trading at all-time highs, we're getting this very energetic reaction while this asset is not expanding lower at all. Now why? Because if all assets want to trade lower, because this asset is clearly stronger, it needs compensation in order to reach the same low, right? And this is what I'm saying earlier, right? So you have like say you have two runners, right? And one runner one, is far ahead, right? Like say the race is 500 meters. Say runner 1 is already at 300 and runner 2 is only at 100, right? If you go by that pace, then runner 1 is obviously going to hit the finish line, but we want both to reach the finish line at almost the exact same time. And so what does the runner that is in 300 meters do? Either the first runner has to slow down or the other runner has to speed up. Does that make sense? And in this case, we get both. Because we're trading to the downside. Downside is the goal. NQ is slowing down while YM is speeding up to the downside. So you see how NQ is waiting for YM to trade lower because they both want the lows, right? And so in this scenario, even though we kind of get this lethargic move on NQ, see how much farther we get below this low compared to YM. Because then again, NQ is still the weaker asset, right? And so after that lethargic expansion, we get this 2-stage, which is fine even though there is no reversal. But look at the lower time frame on this one. This is what's fascinating, dude. Everything's just so fractal. It's kind of crazy. So you see how the asset that is weaker is obviously CSDing, right? But look at this. I think it's on the 5-minute chart, I believe. Give me a sec. Yeah, yeah. So see how this asset is considerably weaker? Now look at the lower time frame signature in this one. So you see how we're both V-shaping lower, right? We have that CSD, but like, look at this. NQ is now retracing deep into this order block, right? Well, look at where that is on YM. It's this on YM. So basically, in NQ's language, YM is just did something like this, and it didn't do that. Now, this asset is considerably stronger on the intraday, but it was weaker here, and now it's weaker again in the lower time frame. It allows both assets to expand lower, right? And now, why is this asset retracing while this asset is expanding lower? Now, I want you to point out, I want you to look, set your eyes at 450, this kind of right here. See how we're already below the range? As I said before, if you're in premium, you get higher chances of deep retracements. And that is why we kind of got this retracement up here. But look at YM. The current range that we are trading in, YM is still high here in the range. And that is why look at how clear the delivery we get, right? Because we are still in premium of the range, right? So I want you guys to appreciate that. It's just something that I notice in the charts, and this is what confirms when my bias when I'm in a trade. I made a video about this on YouTube that you guys can watch, right? It's about higher time frame, low time frame strength switching signatures. I need more water. Hold on. Now, now, look at here, right? So the framework here, we're sweeping this relevant high, right? We're sweeping this relevant high, and we get this two stage. Now, ideally, what I wanted to see when I was looking at this in the chart was that we get this second stage. Now, instead of this, I wanted YM to make this sweep. What did I just do? Oh, yeah, I want YM to make this sweep, but instead it didn't do that. I just did this instead. Now look at NQ. It's basically doing this. It's basically doing this, right? And now because it's doing that, there is never any strength switch. Now, what did I say? We need compensation with a lagging asset. So you see how YM is not filling this gap? And it's not making that SMT either, while NQ is considerably stronger. But I want you to know, look at how far NQ is retracing. This is a very, very, very deep retracement for NQ. We're digging really deep into this gap. I think at some point we overshot the gap even, right? And so in this scenario, what I need is a strength switch, because if we both want these lows, look at how far NQ is to the low compared to YM. Look at how close YM is to the low. Right? And so we need a strength switch here if I want to trade this. Now, this is when I would demand a strength switch, because this is tweaking. It's like so high up in the range. I want all assets to trade lower. And we do get that strength switch with this 15-minute SMT fill. So you see how the asset that is making failure swings is now sweeping this gap. And this asset that is sweeping is now making that strength switch. Right? See that? And we also do get that 90-minute strength switch as well here. So you see how this asset that is making the failure swing is sweeping this high. Tapping into the gap. And this asset that is very, very, very deep retracement is now getting this strength switch. This is NQ's compensation for its weakness. Because it is much weaker, it needs more room to move lower. It needs compensation to move lower, and we get that compensation with the strength switch. And then after that, I took YM actually here. I took the CSD lower. I took this in a 5-minute low key. Yeah, I took this. And there you go. Targeting the low. This was a more of a risky trade, but I think I took some partials here. But anyway, let's move on to the last example that I have for you guys. Now, this is a lagging asset trade, right? So RB already hit this high. I want you to pay attention to when RB hit the high. RB hit the high at 11. Now, look at where AHO and CL is. Where was that? Yeah, look at where AHO and CL is at 11. They're right here. AJO has a long way to go to this high, but it's close enough that you can still expect a lagging asset. Look at where 11 is here in CL to be close at the high of day. It's kind of crazy. Okay, anyway, let's not get distracted. So RB hits the high. So now we know that RB is the strongest asset. Now we kind of get this two-stage, right? This SMT fill, this asset is 12 o'clock is closing bearish. On AJO and CL, 12 o'clock is closing bullish. So now we get that strength switch with that PSP and this sweep as well. This gap fill. I believe it's a 90-minute gap fill, I think. Okay, but it's not. But the point is we're getting this gap fill, and we're getting this PSP. Now we know that this asset is leading. Now it is switching to the lagging asset, so these two can catch up. So what I said earlier about a race, right? RB already hit the finish line, but AJO and CL also need to hit the finish line. So what does RB do? It slows down, while CL and AJO speeds up. Now, how do we know that RB is slowing down? It's consolidating. It's making these cracks in correlations, while CL and AJO are not. So you know now that CL and AJO are speeding up, while RB is slowing down and potentially even stopping. And so with that SMT fill strength switch, right, we get this signature. And I took the 3 minute here. It was like somewhere around here. I took this 3 minute CSD. I actually took this on live yesterday. No, I didn't take it on live, but I took it like 10 minutes before my live. And I started my live early so we can watch this hit. And we hit that. Maybe I could have held low key, but I don't really care. I can anticipate that. It's already high. Okay, but now notice this. Right. Let me pull up some seconds charts. Now, I'm already done with the example, but I'm giving you guys something to appreciate. This is something that I appreciate and I love talking about. This strength switching thing. Note how... Oh, I have both AJOs pulled up. Hold on. So I want you to note, starting from this point on in time, just a little detail that I want to... Sorry, dude, my throat is tweaking. A little detail that I want to point out for you guys. Now, this is never a two-stage I would use. It's just a random two-stage. But look at how, right? This asset is previously stronger and it is expanding. But now it is consolidating. Now, what do you want to wait after consolidation? You want to wait for an AMD reversal. So now we get that resweep right here. But look at how strong AJO is, right? Now, again, in this scenario, this high that is marked with the line is our target for both CL and AJO. Let me mark that here. That is the target there. So look at how AJO gets this immediate expansion higher, and we are like ticks away from the high basically. So look at 115. 115 is here. Look at how close we are, and look at CL. Now CL still needs to reach this high. Now this is the race that I want you guys to visualize. AJO is already almost at the finish line, but we want both assets to reach the finish line at the same time. So what does AJO do? It slows down while CL speeds up. So because this asset is already almost there, it slows down. This is the slowdown. While look at how 115 moves. This asset is speeding up. So right. So look at the shaded boxes. Compare the price action between the two. This asset is almost there, but now it is slowing down. So CL can catch up. Right, so in this scenario, this is slowing down. This is starting to run faster to the highs. And so what result do we get? You get both assets hitting the highs. So you see how that is just fucking amazing, dude? Like, just blowing my mind. Like, I was watching this in real time. I was like, dude, there's no way, right? Because look at how amazing this is. Like, the delivery here is just so clean. Everything is so aligned, right? This asset is waiting. While this asset is running, and both are reaching the high. Dude, it's amazing. Something you can appreciate, right? And so we're gonna move. I'm gonna add more examples, right, before I post this on YouTube. But for now, that is going to be the lecture. So in this example, we have YM and then Q, right? You have YM sweeping all-time highs. This is the daily. We are trading at all-time highs on the YM, and we have swept all-time highs, and immediately we see rejection lower after sweeping all-time highs. And for NQ, we also see a candle 2 closure on the previous day on the highs. Now we can disregard these highs because we have SMT between them, right? And we are showing clear expansion away from the SMT that is to follow. Now technically this isn't an SMT, but if you look here, this is the high, right? Now that is the SMT that you have. And then we have a candle 2 closure below, and all assets are expanding away. So our reasonable target for the daily is that we are going to be targeting these lows down here, these lows down here. And so I have pulled up the current, this is a current replay. Now this is the hourly chart, which we are going to be focusing on, right, for today. And so you see how on the daily, obviously, YM is stronger, right? And you see how NQ is the weaker in the daily because YM is above these highs. These highs right here are these highs on YM. Like it is this high on YM. And see how NQ is massively below these highs and YM is trading at all-time highs. So on the daily chart, we have NQ and YM, right? NQ is the weaker, YM is the stronger. And so if we want both assets to expand lower, YM needs to be weaker intraday, and we actually see that here, right here, in this January 13 candle. You see how this closed as a huge bulky expansion candle, while this didn't have that much of an energetic move, and that is price allowing the intraday on YM to catch up with NQ, right? So this is YM. Actually have them flip, my bad, but this is YM, this is NQ, right? You see how YM is significantly weaker to the downside. Actually, I'm gonna go flip them. Yeah, there we go. So you see how YM is weaker to the downside compared to NQ, while NQ is weaker on the intraday. So NQ is weaker in the intraday, right? NQ is stronger to the downside on the intraday, but now it is weaker on the intraday. My bad. NQ was stronger to the downside in the daily and the higher time frame, but in the intraday it is weaker to the downside. And so we have that, right? We already have that kind of strength switch going on between YM and NQ. And now we are opening up. This is 1800. We're going to mark out 1800. Now that is 1800 open. Now we have 1800 open on all assets. You see how we're all just trading below, and we have this relevant swing as our ultimate target on both assets, right? So both assets are expanding lower. We're creating gaps, but notice how we have already established that YM is the weaker intraday, right? But now we are framing an intraday target, and so now the weaker asset and the leading asset to the downside should go to this low. However, look at how far away NQ is and how lethargic NQ's expansion lower is. So now what do we need if we want NQ to also reach these lows? We need a strength switch between the both of them. So we have intraday stronger on YM, right? Intraday YM is leading to the upside, right? But now it is leading to the downside just because it needs the compensation because it is so strong on the intraday. And now, as you can see, we open up the day, and immediately on the intraday, YM is the leading asset to the downside. But notice how we sweep this relevant high and we form a two-stage, right? We form a two-stage right here. Right, yeah, we form a two-stage. So as you can see, YM is sweeping this high and it is forming this PSP, right? It is not a PSP strength switch, but we don't need a PSP strength switch because this is already weaker on the intraday. And now if you want the intraday to also expand in the same direction, you need the weakest asset to give way for the lagging asset. You need the leading asset to give way to the lagging asset to take this low as well. I'm just saying weaker. Sometimes I say weaker as in to the downside. Sometimes I say stronger to the upside. But just to avoid confusion, I'm just going to use leading and lagging. You see this? Now, this is the lagging asset to the downside. This is the leading asset to the downside, as very obviously stated in this lethargic move. But now we have a strength switch two-stage PSP, where we have that SMT confirmed with the PSP, right? And look at this NQ, right? It's not sweeping that high and it's closing bearish. And that allows for both assets to expand lower. So let's play the lower time frame price right here. As you can see, YM gets this kind of close below, right? NQ is already expanding lower, already V-shaping lower. So now that we have framing this from the intraday to the lower time frame now, similarly to how we did on the lower time frame, similar to how we did on the daily to the intraday, right? So the daily before, the leading asset to the downside was NQ in the daily, but on the intraday now, NQ is the lagging asset. Now we're going to do the similar thing here, whereas you can see NQ is now the leading asset to the downside, right, to these lows, and YM now in this particular move is the lagging asset. So what do we need? We need a strength switch on the lower time frame. So I want to see YM here trade lower and make a faster CSD lower in order for us to take these lows. So we're going to play price, and you can see clearly from here both assets are expanding lower, right? And you can enter off of this, and this is your kind of strength switch, right? It's, you see these little details where you see how NQ is coming up and retesting this order block, right? And you see YM is not coming up and retesting this order block. So exactly what I said before, you want to see YM, the intraday lagging asset to the downside, you want to see it become weaker on this smaller CSD lower, and that is exactly what we get. And we also get this kind of sweep above, right? And while YM is not, and so when I took this in real time, I saw this CSD lower, and I entered there. I have my stop above here, and then I was targeting these lows for a 4.7R. And now all assets are expanding lower. All assets should hit the draw. So as you can see, play price, and it delivers beautifully. Now this example is pretty much controversial because I saw that a lot of people were asking why I was so fine to short this. Now, a lot of people shorted this, right? A lot of people that, you know, your mentors, right? We all shorted this, and you guys are, I got a lot of questions after I posted my trade, in which why didn't you need to see a strength switch in order to trade this to the lows? Because if you look where 1800 is, 1800 is way up here, right? We have an unestablished high of day, and then opening up the day, we're basically just trading lower, right? We're trading lower, and there was never any retracement. And at some point, a lot of people wanted to see this, maybe this low or this relevant low be used as a manipulation where YM takes this low, and then we get a resync to trade back higher. Especially since when you look at the daily time frame, it also does support expansion higher. I mean the weekly profile. It does support price opening up, manipulating here, and then coming back into the range because we are trading in a range protocol, right? So this is a bit was what got people a bit concerned when it comes to this type of example. So I want to show you guys. So let's look at what 930 did here first, okay? You see we're opening up 930 right here. This is 930 open. Let me tell you what invalidates a bias, right? So just a little diagram here. When you have a bias here, say you have equal highs and then you're trading into those highs, what invalidates you from looking at those intraday highs in the first place and makes you think that this is no longer a viable target for this type of move? This is when you expand lower and you create gaps, right? And you get a continuation SMT fill with those gaps, right? So you never should marry your bias when you see that the market is telling you that it does not want to go to a certain level. Then you have to listen to what the market is saying. And so here we open up at 930, and we did manipulate this high, although it was a bit ugly, right? I do admit that this was a bit ugly because I wanted to see this high get ran out, and then would have been a much better shorts. And yes, we do get that expansion lower, and we get a gap. We get gaps as an expansion lower after we took out this high, right? And then we get what? We get a continuation universal sequence inside of those gaps. In this case, there was no SMT with the gap, as you can see, right? Both assets hit the gap, but you have SMT inside of the actual gap, right? And now there was no PSP confirming this, but when you want to trade into a somewhat of a farther target on the intraday, you want to see a higher time frame swing point, and that is exactly what we get here. So here we open up, we kind of consolidate for a bit, and now we get this two-stage sequence on the 90-minute here, right? So we kind of have this two-stage sequence in the 90-minute, and this is a PSP. The PSP is the third candle of the gap, and we kind of have this, and also as well as we are failing to manipulate this low. So look at the lower time frame price action around this low. Let me show you. You see how we're just trading through it, and we're coming back in here, and we're fitting a gap, and then we're trading lower again. And so when you fail to manipulate a certain relevant level, then your next focus should be the relevant level that is beyond that, right? And so here, it also adds that this is a 90-minute sequential SMT as well, which is way stronger than an actual SMT. And so when we fail to manipulate this level, then we're going to this level because there is no other relevant level than here. After we get a failure to manipulate here, then that eliminates the chances of price consolidating and reversing, right? If we need to reverse from this point of price action, then you're going to need a strength switch where YM probably makes a failure swing SMT or something like this, like YM goes lower, right? And then the next candle, we have this failure swing SMT, and you have NQ just making this SMT, preferably a two-stage, just to show the actual relative strength between the two. But we never really got that. The question that people were kind of debating on this trade was that can we make it? Do we have enough liquidity in the day to make it down here to the draw, right? Because the daily range is pretty much exhausted. However, it was possible because if you look at the highs, it has a small wick, so we can expand lower. If you look at the weekly time frame on this, it's gonna spoil the weekly candle, but whatever. You have somewhat of a decent wick to work through, right? Now, it's not the smallest wick in the world, I do admit that. But if you look at the weekly, the longer the wick is, the shorter the body can be. And this is not a large enough wick to quantify that we cannot expand lower. It just means we're not going to expand lower as much. And so we get that 90-minute swing point here. And this is when you don't need a strength switch because all assets are V-shaping lower in the lower time frame as well. So let's move to the 3-minute. And you could have taken the 5-minute here, but I was a bit late. But this was the trade I would have taken. This also matters, right? Okay, hold on. This also matters that this trade was viable because if you want to trade, like say you're trading at high of day, right? You never want to long here. You want to wait until it retraces. And we probably get an SMT fill, a universal sequence, right? That is preferable. But what needs to happen is that you need to get at least 2R, or you need to be very, very comfortable with going break even at the retracement high or low. So inverse this for bearish. Say you're trading lower, right? You're trading lower like this. You never want to short here because this is low of day, if this is low of day, but you want to wait for a retracement. Maybe some cracking correlation here. No, yeah. Mandatory cracking correlation right here, right? And then if you want to trade this, you need to be comfortable with going break even, partialing, or taking profit at the very least 2R to the retracement lows. That is essential. That is what you need to have, okay? You need to be able to manage your trade at this because if you're entering here, then you're not going to be able to manage your trade here. Or if you're entering here, right? This is why you don't want to enter at low or high of day because you can be prone to retracements. Price can take you out and still go in your direction. And so that is exactly what we get here. You also never want to short in discount. You want to short in premium. And so this was arguably in premium or around EQ of the range. We tap we tap the premium of the range. We barely crossed EQ, and we get this closure right here. I was comfortable with going break even as soon as as soon as we hit this low. I got a bit of a late entry because I was late to the charts. Now I took this gap instead. I had a bit of a more conservative stop. Now I made up for this by immediately going break even once we hit this low. I'm break even there. Once we get this CSD lower, right? I think my stop was like right around here at this gap, but I was really conservative with my stop. I wanted to get 3R to the lows. This gets 3R, I think it's it. Yeah, it's around here. Once we close below here, I'm immediately managing my trade to this, as I don't want to see it go back higher. But notice how NQ is behaving as well, right? After that 2-stage, NQ is also showing expansion signatures lower. Right there. See? NQ is also showing that it wants to trade lower as well. We're forming gaps in the lower time frame. On the 5-minute, we're forming gaps. We're getting an expansion. The hourly is a small wick. You have a small wick on the hourly. You have a small wick on the 4-hour. 4-hour is an expansion candle already. And so everything is aligned for shorts right there. And that is why this is one of those cases where you don't need to observe a strength switch. Now for this next example that we have the most textbook, the most free setup of all time that you could have taken. This is literally textbook how strength switching works. Let's navigate in the daily first, right? Coming into the day right here, we're opening up Monday. I'm pretty sure this is when news dropped, like weekend. So we got this huge new week opening gap and we trade back higher and we're closing this as an expansion day. And so following this on the daily, your draw should be very, very obvious, right? We're drawing to this previous day's high is the low-hanging fruit, and you have this high as well. But ultimately, this high is the draw, right? And now looking at YM, obviously this gap is the draw, and this high right here is the low-hanging fruit. And so with the continuation sequence, right, and with this protocol, of course, what you want to do is you want to look at the previous candle. You want to mark out EQ of the range of this previous candle, and you want to look for PD rays up here when you want to trade this higher. Now, if this were bearish, you want to just look for PD rays at down, right? So, like, say you want to trade this candle lower, you want to take your fib anchor here, and then you want to take PD rays down here. And so now refining that, let me keep this here. Let me keep this fib here so you guys can visualize. Now dropping into the 4-hour, right? There is really nothing that you could take right here. And so if there is no PD array, the market will create one. So we're probably going to engineer some liquidity. And so we have this 4-hour open, right? We have this 4-hour open. And after the first 4-hour open of the day, we already have created this PD array that we could trade away from. This 4-hour gap is in the upper half of the previous day's range. We also have that same gap right here on YM, as you can see. And now what we want to see is we want to see one asset trade lower into this gap, and then we want to trade it back higher with this high as your ultimate draw, and then you're probably looking to target this high as well. Before the trade, I only targeted this high as a low-hanging fruit. And this is what I always say, right? If your target is way past or way higher, then the low-hanging fruit is going to be very high probability. I always say this. Let me draw a diagram for you guys. So say you're trading lower and you get that reversal, right? Say you have all of the framework, you have the correct correlation necessary to quantify the reversal. If the ultimate draw for price is this high, then this high is going to be very high probability. Now, imagine if this asset wasn't like down here before. Like, let me draw that again. I accidentally did it. Right, so if you get that reversal, catch a reversal here, and your ultimate draw is this high, like say this is the weekly range, and you're ultimately drawing to this high, or even this high, then the first high before the rest of the highs are going to be very low probability. This is what's called a low-hanging fruit, right? This high is very high probable to be hit. So now imagine this. Let me visualize it for you, right? Say you're running a marathon. Just say you're running a marathon, and the marathon is 30 kilometers, and you yourself, you know you are capable of running, like say 25 kilometers, and you want to challenge yourself to running 30 kilometers, right? What is the probability like with your capability of running 25 kilometers, what is the probability that you can run 5 kilometers and finish it? Very, very high, right? It's almost like 100% chance. And you're going to run that 5 kilometers very, very quickly. You're not gonna stop for breaks. You're probably not gonna stop for. You're probably not gonna stop for a water break. You're probably just gonna. You can probably sprint that through. Well, not sprint. You could probably jog that through. You could probably run that through fairly quickly, because you know the ultimate target is 25 to 30, and you know you're capable of running much more than that, and so that is why. Okay, I hope that illustration makes sense. So like this, right? If you know that your capability is up here, then the probability of you getting up here is very high probable, and we're probably gonna get to this high without any retracements or any deep pullbacks, or we're gonna leave unfilled gaps on the way there. And so now we already have this 4-hour gap formed. This was in London, and we do get this cracking correlation, right? It is a 2-stage as well. Now there is no strength switch within this 2-stage. However, as I mentioned before, you could trade a 2-stage without a strength switch as long as both assets V-shape away. Now, I waited for midnight open here, and this is gonna be on another one of my lectures where you wanna time your entries with candle body openings. I'm going to be working at that lecture, but for now, I waited for midnight open here, and this is midnight open. We just mark it out. Do orange. So this is midnight open. Now I wanted price to resweep this. This is a human error. I didn't need price to resweep this because we're V-shaping anyway. So I didn't take that trade because I wanted a resweep. I shouldn't have demanded a resweep. I'm going to be very transparent about that. I didn't take that trade. So I waited. If you're unable to catch the reversal, you want to trade the continuation instead. And so that continuation is exactly what we got here. We got this 2-stage. But again, now there is no strength switch within this 2-stage, but this is a strength switch 2-stage because of the framework. So this is when you typically zoom out. Notice which asset didn't sweep out this low. It is NQ. NQ is the one asset that is not sweeping this low. YM is the asset that is sweeping this low. Right? And now look what asset is closing bearish and then taking the gap. NQ, the asset that is leading, which was previously identified by which asset didn't take the low. So now NQ, the asset that is not sweeping the low, is now the asset that is sweeping the low. And that is your strength switch, right? That is your temporary strength switch that allows us to trade this higher. This increased the probability of this. And as I mentioned before, if your draw is up here, then this draw is going to be very high probable. So you see how we just expanded to that draw without much retracement. And so I took this trade. I took this 3-minute CSD as soon as we get that strength switch 2-stage SMT fill. Beautiful, beautiful textbook stuff. I took this close right here and my stop right here. And then I TP'd at this high for a 6R. Very, very textbook, right? Very textbook longs, dude. Like really free. If you guys understand how this strength switch stuff works, it's going to print you so much money. If you understand when to demand it, if you understand how to navigate with this strength switch, then you're going to print money. So again, to recap, this asset is the one sweeping the low. So we have identified this asset as the lagging asset, or as the asset that is weaker to the upside. And now this asset that is weaker is now getting that strength, that compensation that you need with this strength switch 2-stage SMT fill. And after that, you get the most textbook longs of all time. Beautiful, beautiful stuff. So here in this next example, we have oil, right? We have oil, RB, and CL. So I want you to first notice, irrelevant of how the day opens, right? Just notice how we are trading right now, right? So look at the daily. We're going to navigate this from the perspective of the triad. Obviously, we are already trading at all-time highs. But note that we do have a we do have a small wick down here, right? And that allows us to expand, right? And again, the protocol here is that if you do not need to catch the low of day if you're unsure of if price will actually expand higher. But again, look at how the intraday is behaving. Look at how we are already expanding away from the low of day and we're creating gaps. right? But this is the easiest way to trade, right? Lagging asset is one of the easiest ways to trade. And this is because you do not need to guess the direction anymore. You already know the direction it's going to go. You just need to wait to see if it confirms that it's going to go there, right? So if you have a lagging asset, in this case, CL and HO already took the high. Now you want to see if you already know where RB is going. You already know RB is going to the same high. You just need to wait for a strength switch, but you don't necessarily need it if the leading asset expands and it has another draw. But in this case, if you see CL, it doesn't have another draw. So coming into the day, note when CL took that high. It's 4 o'clock, right? Now look at when AJO took that high. Look at when RB took the high. RB took that high at 4:30. So after CL takes the high right here. RB followed soon after, right? But look at where AJO is at 4:30. We're still somewhat far from that high. And so look at how CL is behaving after taking that high. We don't get a reversal after the high. We expand through it. We open up another candle. We even expand through it. And so if CL is way above this high and it is still expanding, then it's very, very obvious for you to demand that AJO, is also going to take the same high. So in this case, AJO is the lagging asset. CL is the leading asset. And RB is somewhat in the middle because it just took out the high. I clicked RB. It doesn't want to change. It's kind of lagging. Sorry. And so as soon as RB takes this high, we form this gap, right? We form this gap. But look at how, even though we get this down move right there, right? We don't really get gaps, right? We can't really trade the reversal. Well, for one, if you look at the 4-hour chart, the 4-hour candle, it's really huge. You can't expect it to trade lower. You want to wait for 6 to trade this lower, right? And so basically after we take out the high, we get this gap formed and we get a strength switch right there. You get the gap fill, but look at AJO. We did close that gap, but we got that strength switch right there. And so after that, I was 100% sure that price is going to take the high. And so I entered off of this 1 minute fill. 1 minute CSD right up here to the high for around a 2.5 hour. And then I added more when price retraced down here. Right, I think I added more of this 1 minute retest or something. I entered more. I pyramided more off of this CSD right there in the 3 minute. I wanted the retest. I got it, and I held my second position for a bit farther than 2 hours. Now, if you look at my Twitter post, you can see that my fill is down here. It's similar to what happened to me the other day, right? Where it price filled me like down here, which I don't know why it did that, but it did that. So notice how even though CL is the leading asset, CL never filled this gap. So CL never waited around for AJO. Right? AJO just simply took this high as well. But RB is the one that got the strength switch. Right? But it doesn't really matter because CL is still expanding higher. Now you cannot long this asset because you don't have a draw. You also can't long this asset because it doesn't have a draw. You want to trade the asset with a draw. Because CL, even though it is expanding higher, you cannot anticipate where the expansion will stop. So you don't have a determined draw that price is going to draw into. And so this is why you take AJO in this scenario AJO in this scenario to catch up to the same high. And CL, even though CL never got that gap fill, we get that with RB. And all assets also V-shaped higher. So look at how RB is behaving here. RB is V-shaping higher. CL, even though it says all-time highs, it's also V-shaping higher. AJO, V-shaping higher. You get everything you need for a lagging asset. Very, very textbook lagging asset trade. And so that's that for this trade. Now for this example, we have a very, very straightforward approach of a strength switch between CL and AJO. If you look at the daily here, right, coming into the day, we have price opening up on Monday and trading lower immediately. Now we do have, with this close on CL and this close on AJO, we can kind of identify CL as sort of a lagging asset on the weekly, right? And also AJO took Tuesday's high by Wednesday. And you can see here, Wednesday never swept that high. But we are opening up the day up here. There is no reason to be bearish this day. Despite there being 3 up close candles, we still have an objective at the high. So if I were to be bearish this day, I would want to see these highs get ran out before we trade lower. And this is very, very simple, right? We're opening up the day. This is 1800. Let me mark out 1800. This is 1800. This is 1800 right here. So you see we have a delayed daily protraction open with this profile, right? Where we open high first, and then we trade lower, and then now we're trading back higher again, right? And so this is basically qualified just a simple, very, very simple SMT strength switch where this asset is taking out this low, as you can see. Now compare that to this low. This is the low on HO, right? And so we get that strength switch with this 2-stage 90-minute. Now, why am I fine with taking this without a gap? Right? If you're using a sequential SMT, I never need a gap. I can use consecutive candle SMT if it is a sequential SMT. You have this strength switch right there with a 2-stage. Now, this is a PSP as well. Let me clean this up a bit. We also have this sequence of the 30-minute, right? In the 30-minute, CL for a moment did somewhat realign as the weakest asset, like down here, but we get that strength switch over here, right? With this low, this asset also closed as a PSP, right? And we CSD'd higher. We CSD'd higher right here on CL. Yeah. Now the problem with this trade is I can't anticipate, and this is why I wanted to point out this example. I can't anticipate HO trading lower after this CSD higher, right? I can't anticipate that. It's not something I can take. This is what I took, by the way, to that high for around a 2.75 R. Now notice, even though HO also CSD'd higher, it started expanding lower at 9 a.m. open, right? And notice how, as I mentioned before, in decoupled markets, you have a kind of a tug of war, right? And so now with CL expanding higher and HO expanding lower, you basically have HO pulling CL lower, and you have CL pulling HO higher. So they're pulling each other in separate directions. So let's see what RB is doing during this time. This time RB was kind of the middle asset, but it also was being pulled by CL higher, right? But notice how as soon as 909 hits, right, we kind of have this bullish candle, and that is when we get that expansion higher, right? Even though this asset was expanding lower, CL was also expanding higher. Sorry, the recording cut off. So this is something to note here, that in HO, right, in HO, we never got the manipulation here to resync higher. And so I was able to kind of quantify this as still a valid trade simply because I was already in the trade, right? If you have this decoupling sequence and you see this, I would never enter this trade, right? I would never enter this trade to trade it higher. I would never do that because it's low probability. Because if I want to trade, I want all assets to be in sync. I want all assets to expand in the same direction. Now, this is not something I can anticipate. So what did I do when I saw this signature lower? I simply went break even, right? Because at any moment, CL can also retrace lower, even though it has this high, simply because HO is expanding lower. Now, if I wasn't in this trade and I saw this, I would never enter it. Now, because I saw that kind of decoupling sequence, I simply went break even on this trade because I didn't want to take any chances, because as soon as this becomes like that, this expands lower, it becomes low probability. But we still TP'd here at the highs. And notice what happens as soon as this asset starts expanding. We get another expansion higher in CL, but that is not something I can anticipate because we don't have anything to target at the highs. So for this example, we have NQ and YM, right? And so I have mentioned in one of my examples that when you want to trade a continuation day, that you measure 50% of the previous candle. But if the previous candle is a reversal candle with a large wick, then you want to measure the wick size instead of the body. And so now you want to look for PD rays. It's basically the same thing. Now you want to look for PD rays in the upper half of this wick as we are opening up the day, right? And so the only thing that you have coming into the day was this 4-hour gap, right? Let me clean this up a bit. You have this 4-hour gap to trade away from now. Now, noting, I want you guys to know here that there is no asset actually made an SMT with a gap. So both assets hit the gap. You see NQ also kind of disrespected the gap, which was a bit funky for me. And there was no cracking correlation here, right? There was one right here on YM. Now, I didn't mind this, but this is when you would require a strength switch, right? You would require a strength switch when one asset is having a deep retracement, right? As I mentioned before, if this higher is the draw up here, right? And you have a deep retracement with price, right? The more time it spends protracting lower here, the less time it has to trade higher. And so what do we need when one asset makes a deep retracement, right? This is when we need a strength switch, and that is why I actually didn't trade this. Although it is high probability, I wanted to be a bit more careful because this was still a bit sus for me. I wanted to wait for the reversal, right? And I wasn't expecting price to trade lower here simply because there's nothing more to the left. I don't think we're going to get here in the same day, right? The weekly does support expansion higher. As you can see the profile, we also closed this as a reversal candle. And so I can't trust this reversal, right? But we do have this sort of two-stage right here, right? Where this is a gap. I think it was in the 90-minute as well. Yeah, it's a 90-minute gap. Kind of have that SMT. And this is a PSP on the 1 hour. Now, I can't trust this just because the reversal was a bit bad. Although you could have traded it. I was looking at trading this. I just decided not to and wait for the continuation. Again, if you don't trust the reversal, you can trade the continuation, right? This continuation was pretty valid. It's just that I don't like the deep retracement, and so I would have preferred a strength switch to trade this higher, but we never got that. But look at where NQ is, right? So in this scenario, NQ is arguably, no, not arguably, our NQ is already identified as the leading asset. I mean, the lagging asset. I'm sorry, I'm mixing up my words. So we have already identified NQ here as the lagging asset, right? Because it is the one that is going inside of this gap, right? Inside of this gap. And YM is the leading asset. But here is where we get the strength switch. So notice how after this deep retracement on NQ, look at the 2 a.m. open. We basically just expand higher. Now look at the 2 a.m. open here. We expand higher. Look what we did after. 3 a.m. we started to consolidate. Now look at the lower time frame here. It's basically just consolidation after the 2 a.m. expansion. But look at what NQ is doing. NQ is expanding, right? So what's essentially happening here is that YM is consolidating in this range while it is waiting for NQ to catch up to the same range that YM is in, right? And so you want NQ. So you see, if you want to measure where it is in terms of this 4-hour gap, the same 4-hour gap in YM, you see where YM basically waited for NQ to be in the same level around the gap while this consolidated. This is already still in the gap. This is went way below the gap. So this consolidation right here is YM waiting for NQ to trade back higher so they can both expand higher at the same level, right? And we got this two-stage, well, not a two-stage, we got this SMT fill strength switch. Now again, in terms of the actual cracking correlation, there is no strength switch here. But with the framework, this is a strength switch where NQ is weaker. Now it is the stronger asset, right? And this is what I was saying earlier. If one asset has a deep retracement and the other asset doesn't have a deep retracement, and this is the deep retracement, right? So this is basically the move. We're moving higher, and we're getting this deep retracement down here. So you see how we're going past EQ, basically, and we're even closing below it. Now, I wouldn't go bullish here simply because this move lower had no gaps. And so this wasn't the most convincing move lower to trade this lower. If we had been displacing here with gaps, I would have traded this lower. But I was basically expecting price to go up here because of these highs that have been untaken. This was swept by one tick, but now these are just still smooth highs that we want to take, right? This is the ultimate draw. And as I said before, if this is the ultimate draw, drawing into this high is very, very high probability because this is the low-hanging fruit. And after we fail to manipulate from this high, you see how fast we're just going higher? Let me play this a bit. See, after we failed to manipulate, we just went higher fast. And so after that SMT fill, strength switch, I took this on NQ. I took this CSD on NQ. Hold on. Yeah, I took this CSD on NQ. Up there for around a 3.6 R, I believe. And yeah, so just see how fast price is just going. Now, the only lesson that I want to point, no, not the only one, but the main lesson that I want to point out for you guys here is mainly the fact that NQ was weaker and it needed compensation if we were to trade higher, right? It needed to be faster and needed to go at the same level that YM is in. So what did YM do? YM is consolidating, waiting around for NQ to expand to get in the same level. And once the assets are in sync again, because we got this deep retracement, right? But we did get that compensation for that deep retracement. We did get that. I'm sorry, I'm talking too fast. We're getting that compensation for that deep retracement because NQ is now expanding while this is consolidating. So even though this asset did expand lower a bit more than I would like to, it retraced lower, right? Get that deep retracement. We also got the expansion higher while this is consolidating to compensate for it. And now, once we're in here, once we got that SMT fill right here, assets are in sync again, and now they can expand again. So that is why I took that trade. And so this is a very good example that I want you guys to study. And for this example, we have very, very textbook lagging asset longs in a faded daily candle, right? So we're fading the daily candle here. So look at where NQ and YM is currently, right? Look at YM, right? It's already expanded lower. We have a huge wick, right? And look at, this was the day where we had like, I don't know, I think it was like 13 just hourly candles just straight up ripping lower, right? And so at some point, the markets cannot expand forever. You would need to have a retracement lower. And so you don't want to be in trades like this where it's low probability. You can't short this either, simply because look at how the previous daily candle closed. I would expect price to kind of just follow through with this. And you don't want to be in expansion lower from this point because basically then you're longing without a protected swing. There was never any SMT fill unless you want to take this one, which didn't have narrative behind it. And now if you want to look here, you want to wait for a range to form. And from then on, you can basically just take it after that. And so the markets cannot expand forever. The idea here is that we're taking it to this high, only to this high, right? Because we're trading the retracement, right? Because I'm not expecting price to kind of consolidate and continue lower after this huge range, right? And also, we have hit a daily draw right here, right? There's nothing lower more for YM to draw. I don't really mind this low because if you look at the weekly, it's not really a relevant low. I'm more focused on this low, right? So now there's no more lower objectives. Now, even if you were to consider this low, again, what did I say? You can disregard lows and highs that have been left if you have gaps forming between them. Now, I'm not saying that we're not going to draw into this low sooner or later. I'm just saying once we form 15-minute gaps away from it, right? Once we form 15-minute gaps away from it, price is more likely. Let me mark out that low actually, so I can illustrate this. So see this low. We have been So let me state the facts again. We have been expanding heavily overnight, right? And now look at where we're playing out. Okay, so you see how we have this low and we expand higher with gaps. This doesn't mean that this is the low of the market. It's just going to expand higher. No, that doesn't mean that. It just means because we have this high, this relevant high over here. Once we expand away from it, I can't trade this reversal, obviously, because it didn't sweep out this low. If it swept out this low, I probably would have traded this reversal as long as there was a two-stage. If something were to happen to it like this, or like that, then probably I would have considered trading the reversal. But once we form these 15-minute gaps away from that low, the probability that we are going to this low has significantly decreased. Now, once we form this 15-minute gap, now price is more probable to draw into this high than draw back into this low, right? There's a very, very high probability that we're going to hit this high. And it was simply with this SMT fill is why we took it. right? This SMT fill right here on NQ and YM. Or is it? Yeah, this SMT fill. It's a one stage SMT fill, right? Now, no, there is again no strength switch here, right? There is no strength switch here. It is more of a lagging asset continuation. It's not a lagging asset yet because we haven't hit this high yet. But look at where we are here on YM, right? This is why this SMT fill made sense. Notice how we're very, very deep lower here. And look at NQ, right? NQ is basically barely below this low. NQ is basically barely below this low, while YM is significantly below this low. And this is what you're seeing. This is how it's playing out, right? You look at the 15-minute chart. We get this SMT fill where now NQ is weaker. Now YM is stronger. Also, look at how much more YM expanded at the open. Even without that as your strength switch, just looking at this fractal, right? This little fractal of price is enough to tell you that this one stage continuation is very, very high probable. I took this 1 minute CSD higher. And I have my TP here for about a 2.5R. Now, again, the strength switch here was irrelevant in my opinion, right? Because you didn't need a strength switch here. For one, all assets are expanding higher, but I want to point out the significance of this because we got that strength switch on YM, which was the weaker asset as identified by the weekly range and the expansion lower. You see how now we are able to expand higher. Look at how much more YM is expanding after that fact, right? So YM actually went higher a lot more than NQ did. Now, why? If you guys know this piece of price action, if I want to play it, this was actually a predetermined reversal, right? And we went higher in the markets, right? And look at what happens here. Off of this move higher, basically what happened is YM, because of this strength switch, it allowed YM to move higher. And this is the same example as my example here, right? What's happening here is that NQ is consolidating while YM is expanding. Now, why is that? NQ is considerably stronger on the weekly time frame and in the daily time frame and the weekly profile, right? And this consolidation, while this expansion is basically allowing YM to catch up to the same level as where NQ is, because NQ is already here high in the range while YM is deep below this range, right? And so you see that? You see how this expanding higher, YM expanding higher here allows it to have this shallow retracement, right? And this this kind of jagged move higher on NQ allowed it to have that deep retracement. Now NQ is getting that deep retracement. Again, I mentioned this in another example. NQ is having this deep retracement because NQ and YM, in regards to the strength, right, in relative strength, YM is stronger to the downside. And now that move, that 50-minute move, allowed YM to move a lot higher and therefore retrace a lot more shallow and therefore expand with the same magnitude as how NQ is expanding. So some amazing stuff I want you guys to just know with this example. But yeah, that is the continuation trade that I took, very, very textbook longs. And so we're moving on to the next example now. So for this example, we have market decoupling at 9:30 open. So first off, let me go and mark out 9:30 open. I already marked out the 1800 open for you guys up there, right? So this is 9:30 open. So look at what 9:30 did, right? So first off, I want you guys to kind of note how we opened up the day. So we opened up the day, this is just 1800. So we don't really necessarily have an established high of day, which doesn't really concern me, but we open up the day and we just expand lower, right? And then at 9:30, we manipulate this low, which is a relevant low. There's no other low over here that the market can manipulate. And then we know that we have a bullish bias because as soon as 9:30 expands, NQ just trades higher. Now I want you guys to note that you cannot trade as soon as 9:30 opened because they are decoupled, right? So let's drop down to the 5-minute. I'll show you guys what the market did. So we open up and immediately we trade lower, right? And this trade's higher. So that is your decoupling sequence. Now, as I mentioned before, what is YM doing in here? Because it decoupled. Remember, the market decouples so that it can manipulate. And so if market is decoupled, one asset is going to manipulate something before the other can resync and trade in the same direction. Now, in this scenario, did NQ manipulate anything? No, it is expanding higher. Now, did YM manipulate anything? Yes, we have this relevant low that was formed at 6. And what do we get right after we manipulate, right? We get a new phase of price at this low. So this asset doesn't pull NQ down anymore. YM is not pulling NQ lower anymore because it already reached a relevant level and we get a new phase of price. In this case, the new phase of price is a reversal. So we reverse at this low, and because now assets are in sync, you can now trade the assets, right? And this is where we get that strength switch. This 30-minute, I want you to look at the 30-minute. So see how NQ is trading into a gap right here, and YM is not trading into a gap. So this is your SMT. Let me remove this 930 line indicator so it's cleaner. So this is your strength switch, right? So you see how NQ is filling this gap while YM is not, right? So you see NQ is now sweeping this 10 a.m. low, 10 a.m. 30-minute low. Now it's sweeping this, but this is the leading asset. Remember, this is the asset that failed to sweep this low, and now it is the asset that's sweeping and tapping into the gap. So if you look at 10 a.m. low, right, YM is refusing to sweep this low. Very, very clean move, very high probability. And once you get that signature, you can either long NQ or YM. Now I took YM here personally, not because even though it was the weakest asset, because number one, if all assets are expanding, then you can take any asset, right? The only difference here is that you have to TP when the lagging asset is the draw. So I TP'd as soon as NQ hit the high, which is around 11:15. But I took partials here. But so we got this 1 minute CISD. This is what I took here. Now, this high is a very, very high probable target. Now, what did I say again about low-hanging fruit, right? If our draw is ultimately to this high, then this high is very, very high probable. So see how we just ran higher without any real retracement? If you were targeting this and you can get 2R to this high, fantastic. You have a very, very nice trade. But I TP'd right around as NQ took this high. But on one account, I fully TP'd at this high because I believe I got a much better position. But I TP'd right around there for a 2.5 to 3R. Very, 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 very textbook decoupling and then resync. So let me recap this trade again. Let me just summarize this trade again. Market opens, we manipulate, right? This manipulation is the decoupling of the market. So essentially YM is decoupling from NQ. It is deviating from the bullish approach, so that from the bullish move, so that we could manipulate this low. And now after we manipulate this low, you can trade it again because now market is resyncing so we can expand. So notice how while YM was manipulating and reversing right here, notice how while YM is reversing, like if you pay attention to this, while YM is reversing and it is setting up for a bullish move, NQ is consolidating. So again, what do we say about this? NQ is waiting up for YM to catch up, right? NQ is waiting, stalling for YM to catch up. It's like that. It's like the first runner is waiting for the runner that is lagging to catch up to him. And so that is what NQ is doing with this consolidation. So you see how NQ is consolidating while YM is just expanding, and we can confirm that mechanically with this strength switch at the lows, right? See, this asset trades into a gap, this asset doesn't. You can just take this as a simple one-stage universal sequence, but when you have this framework behind it and the strength switch behind it, it becomes much, much, much better. Very, very textbook, very clean move higher from here. And yeah, so for this next example, I have a pre-market shorts that I took. Don't mind the daily candle because the replay button on indices kind of spoils the daily candle, but this I was bearish at one point just because we got this huge expansion, right? We got this huge expansion on previous day on Monday, so I was expecting price to hit at the very least previous day low, operating off of the assumption that, as I mentioned before, if you want to be short here, you want to make sure that you get 50 of the range, and you find a PD array for price to trade into. And so I was coming on the day bearish, and I already had marked out the 2-stage here. Look at the 90-minute. First off, I want to take your guys' attention to this high right here. This high. So notice how NQ is already trading above it, right? NQ is already trading above that high, trading above this high. So you could probably even just mark it out like this. But the point is, we're way below this high on YM. So, and the daily close as well. Look at how much we're expanding lower. Look at how much we're expanding right here, and look at how deep NQ is retracing. So what did I say earlier? When you have a deep retracement, right, you require a strength switch as compensation. Because NQ here is retracing deep back into the range, we need NQ to be weaker now. We need this asset to be weaker to compensate for the fact that it is very, very high up in the range. And so you're probably going to get a sequence where NQ is going to be trading lower and expanding, while YM is consolidating because it is waiting around for NQ. And so we have that first stage SMT confirmed by this second stage. This strength switch at the reversal is basically just telling you that this reversal is very, very high probability. Right, you have this sweep right here. It's a 90-minute sequential SMT as well. And what do we get immediately after that sequence? Let me move this around here for now. Now, what do we get after the sequence immediately? We get a follow through. What happened? Yeah, we get a follow through. It's not moving. Hold on. Let me... Yeah, okay. It did skip an hour. Now, we did reverse here. Don't mind the reversal for now. But we do get this follow through, right? We do get this follow through right here. All assets CSDing, right? I was expecting all assets to hit the low. Don't mind the reversal for now. I'll talk about the reversal in a bit. And then I entered this right here. And I have my stop like right around there. And then I had my TP at 3R, around 3R. So I got out somewhere around this area. And I also got out. So I got out for a couple of reasons. I wasn't holding it to this low. So for number one, if you look at ES, somehow ES already hit the low, right? Look at that. Look at this. Yeah, ES already hit the low. Now, I never like it when ES is the leading asset. So in this case, ES hit the low and Q and YM did not. Now, I don't like it when ES is leading. And I always say this because ES is the byproduct of how NQ and YM move. So ES should always be the middle asset. If NQ is leading, ES is the middle asset and YM is the lagging asset. And inversely, if YM is the leading asset, ES is the middle asset and NQ is the lagging asset. And so when ES is leading, then you have a problem with decoupling, right? And you should always stay away. Well, you can technically still trade it mechanically. I just don't like it because it is for me, my experience is very low probability, and it's better to just stay away rather than stay in the trade. I also exited because I saw this huge up move on YM, and when I saw this close, I think I got out right around the closure of this, because when I saw YM close up here, I was like, the market is decoupled, right? Even though we manipulated this high, again, we don't have the follow through yet. So I'm basically, if I stay in this trade and then Q, then I'm just praying that YM gives that follow through to the lows, right? Rather than just getting out and being safe. So I actually kind of sniped the bottom here. You guys can just look at the executions on my Twitter. And also because ES hit the low and I got her out there. Now, for this reversal that we have higher, I can anticipate this. Even though, as I said before, even though we have SMT down here with ES, first of all, I don't want to be bullish on this. I'm not bullish on this, right? I'm not bullish on this day. And second, I don't use NQ and ES SMT. You can, mechanically you can. This is a personal preference. This is purely personal preference. You don't have to follow it. But in my experience, NQ and ES SMT or YM and ES SMT is never just a single SMT between the two. Normally, if you have SMT with ES, then YM or NQ will have that same SMT. So if you have ES and NQ SMT, typically NQ and YM will also have that same SMT. So there's no point. This is why when I'm live streaming, you don't have me looking at ES for SMTs, because simply this is purely personal preference. I don't use ES as an SMT. right? I believe ES is the byproduct of NQ and YM's moving. So there's no point in looking, because if there's SMT with ES, there's SMT with the other asset. So I don't exit off of the fact that ES took this low, although it is a nice confluence. I exited because YM was expanding higher. And so I can't really cash this reversal higher. So you could have traded the continuation here. But yeah, moving on to the next example. So for this next example, we have gold and silver. Now looking at this daily chart, this is the day that we're going to study, this February 5. Now look at how the previous day closed, right? We're trading into this huge gap, right? And we're sweeping this high, right? We have a reversal. Now take note, there is no other high for price to manipulate. So when we close this as a reversal candle, you already have your bias for the next day. It's very, very straightforward. Now, as I mentioned before, you mark out 50% of this wick, and you want to look for PD arrays below the 50% of the previous wick that caused the reversal. So it's the same for this. As you can see, now we just refine this, and see how we're opening up 1800? We're opening up 1800 basically. Let me clean this up for now. So this is 1800, right? So we're opening up 1800 inside of this gap. Now this is an SMT fill in of itself. So this already should be enough for you to trade this lower. But I have, there's a strength switch here actually. Yeah, this. So you see the asset that tapped into the gap was 1800 itself. So 1800 opens up and taps the gap itself. 1800, note that in gold, 1800 is the highest point of this candle, right? 1800 is the highest here. But on silver, it is 1900. So we have this second stage SMT strength switch right here. Right there. So you have your strength switch right there. Now again, the context behind this strength switch. You want to see strength switch so both assets can expand lower in this scenario, right? As you can see. Now, look how much more deeper gold is inside of this gap, inside of this kind of move compared to silver, right? And now after this, you have silver, which is considerably weaker, right? Considerably weaker, getting that strength switch where now silver is becoming temporarily stronger. And you also have this candle 2 closure as well. And so from that move alone, you could have shorted this on either gold or silver. You could have taken either CSD. Now I didn't take this because I wasn't awake for it yet. But you could have taken something like this with your stop at this high. And then targeting the lows. Again, very, very high probable sequence. But this isn't the trade that I took. The trade that I took was with another strength switch. So take a look at how the gaps form here. Let's jump to the 30-minute. Yeah, wait, no, it's a 50-minute. My bad. Sorry. So see how in gold, the asset that is having this one stage sweep here, just consider this sweep for now. Ignore the other sweep, right? I'm gonna show you guys. I'm gonna clean this up a bit. So we get this first sweep. Now just viewing it from the perspective of this leg, you have this silver which is sweeping higher. Now again, we're getting strength switch here, right? So you see how gold is basically tapping into the gap and getting a resweep compared to silver, which is not getting the gap and not getting the resweep. Again, in this single move, gold is weaker, right? See, gold is the one that is not sweeping this high, and silver is the one that is sweeping this high. But now gold, the one that is making the failure swing SMT, is the one that is getting the gap fill and getting the resweep, while silver is the one that's not, right? And so this is the one that I traded. I took this on gold, this CSD lower. I had my stop somewhere around 50% of this wick. And then I was targeting this. Again, I only wanted to scalp this, right? But then again, as I said before, if this low is your ultimate target, then this draw is very, very, very high probable, right? Because you're expecting price to get to this low. This low is nothing. It's a low-hanging fruit. And again, this isn't even the final one. We get another strength switch here as a lagging asset. So see how there's two opportunities in one? Again, let me show you here.
Silver takes this low already. Silver takes this low at 2100, this 2100 candle. Now look at where 2100 candle is right here. This is the 2100 candle, right? At February 4, 2100 candle. See how much farther that is? Again, because gold is farther from this low and silver already took the low, we need compensation, right? We need gold to wait around while GC or gold catches up to this low. So what do we get? We get this strength switch SMT fill, this lagging asset, right? And see, you just see how fascinating this thing is. Like, very, very textbook lagging asset trade. Silver takes out the low, and we're getting this SMT fill. And the gold that is not taken the low yet is getting this failure swing SMT fill, right? And this is telling you that gold is going to catch up. And so from this, I believe I took the 1 minute here. Yeah, I took this 1 minute right here. I'm gonna stop like right around there, and I TP that this low. Very, very textbook, right? So you see, just really fascinating stuff, right? You see how in this move, first you have this two stage right here. This is your first strength switch, and then you get another strength switch here, and then you get another strength switch here. So you see how assets are basically just strength switching to allow the assets to move. If one asset is moving way too quickly for the other, the one that is moving or leading or moving way too quickly is going to wait around for the lagging asset, right? And when you see these signatures, then that is basically confirming that price is going to expand. And that is exactly what we get here, right? So in this scenario, silver reached this low way too quickly. And so what does it have to do? It has to wait around for gold. I'm getting things mixed up. It's waiting around for gold to reach and sweep this same level as well. So what does it do? We get that strength switch between gold and silver. So we can get that lagging asset. And you see how very quick, very clean these moves are, right? And again, in this scenario, in this first SMT fill, right, silver is having that deep retracement. Gold is just retracing into a gap. And so what does it do? We get that strength switch. While in this scenario, gold is waiting around for silver to expand to the same level, right? But then again, silver got too quickly to trade to the downside. So what does it do? It waits around for gold to catch up. Very, very textbook lagging asset trade. Really good study here, right? If you guys watch this video, I recommend you guys study a bit more on how the Asian session into London session moved during this day, February 4, on metals. Very, very textbook, guys. Very, very textbook. You guys need to study this. It will just fascinating stuff, dude. This stuff still amazes me into this day, man. Like, it's just really amazing how the markets move. So moving on. So for this example, we have a traditional continuation model where if you look at the daily first, right, we're just kind of consolidating, right? Let me clean this up a bit for now. We're just clearly consolidating, right? So I was more bullish here because we're opening up and we're trading lower, right? And also because pre-market or before we have this sequence, we have gaps trading higher, and we have these highs that haven't been taken yet, right? So silver already took those highs, right? And now what are we getting? This is not a strength switch, right? So typically what you want to see here is that the asset that took the high is making the failure swing. Making the SMT, and the asset that hasn't taken the high is making the failure swing SMT. So there's no strength switch here yet, okay? There's no strength switch for this move yet, right? There is also no SMT, but if you look at the 90-minute, we are getting this sequence right here where this is technically an SMT fill because silver never took this first gap and gold is digging deep within this gap. But this is where we get the strength switch PSP. Let me mark it out. This is where you get your strength switch PSP right here, right? Where you see this asset is closing bullish and this asset is closing bearish. Now this is when you know that gold will catch up to the same highs that silver took, right? You have the strength switch PSP that allows gold to catch up to silver, right? So we have this 15 minute as well. That is also a PSP, right? You have this PSP here, this strength switch, and as well as we have a small wick, and we're kind of opening up the next hourly candle with a reversal already put in. And so I simply took this CSD right here, right, and I held it for around 6R, I believe. I held it way past this high. I was holding it. I was expecting price to kind of take this high as well, but I closed around 6R, I believe. Yeah, I closed around 6R. I could have held it for more. Honestly, I think I held it to like the body of the previous candle. I can't really remember, but I know I got 6R in this trade. So if I held it to this high, I probably had a wider stop, but it was probably around 6R, the one what I took. So I took it to this high. Now you're getting this strength switch PSP, right, on the 90 minute and the 15 minute as well. Now take note, right, the 90 minute PSP is confirmed with the 90 minute closes. So the 90 minute closes at 7:30, right? And so where is 7:30 on this chart? 7:30 is right here, right? So if you want to wait for the 90 minute PSP, that is completely fine. But so we're opening up 7:30, we're opening up into a gap, and this is your continuation, right? But you don't, if you don't want to wait for the 90 minute close, you already have this 15-minute strength switch PSP that kind of confirms we're trading higher. So you could have caught any one of these trades, which is fine. It's decent if you took the first, it's decent if you took the second, right? You have this first CSD, right? And you also have this second CSD right here for your continuation, which is fine as long as you get 2R to the high. Now you don't really get 2R to the high with this, so you have to be comfortable with moving your trade break even as soon as we hit this high, which we hit 2R anyway on the next candle, which is fine. And so yeah, so the next examples that I'm going to give are two of the YouTube videos that I already have posted. Okay, so I'm adding them to this video for informational purposes only, so you guys don't have to switch out, because technically they are lectures about strength switching as well. So I am going to add them to this video as well, but they are still posted as their standalone lectures. Okay, so I'm just going to stitch those two videos to this video as well, just so you guys can have all of it in one place in one video, so you guys don't have to switch, because those two are also strength switch lectures that I would like to add. So we're moving on to the
Alright, what's up, guys? I took 2 trades today on NQ, and I basically longed after London Open, like an hour after London Open, and I longed after 9:30. And there's a lot of lessons to be picked up here, right? There's a lot of strength switching that went on with this move higher as well. Excuse my voice, just because I'm really sick and my head hurts. But I wanna put out this video for you guys to study about strength switching, and I want you guys to kind of denote how we delivered and how we're strength switching as we deliver higher into this ultimate draw. So let's start with the daily. It is being recorded. Start with the daily. So, first off, I don't really mind these failure swings, right? It is of a concern, just because it is not really like a very far sequence, as you would say, right? It's not like a really far sequence that you can take right here. And so I was skeptical at first, trading away from these failure swings on NQ, but we formed a gap away from it. We formed this 4-hour gap. We're expanding away, right? We have expansion away from it, and we have YM SMTs at the low right here. Though I would have liked it if YM took this low, but we're just probably leaving those equal lows as a target for like next month or something. So starting today, we're opening up after a candle 2 closure right here. And so I'm expecting NQ to run Monday highs, although it's a bit sus just because the weekly wick is kind of small. I mean, it's not the smallest wick of all time, but that's why I was kind of concerned. And the other thing I was concerned about is this deep retracement on NQ, right? This deep retracement, I didn't like that, but YM didn't have a deep retracement at all. It stayed in the gap, which is fine. It's acceptable. But you see how NQ is having this deep retracement right here, and you see how YM stays in the gap. Now in this scenario, YM is stronger, but notice how NQ actually delivered to the high while YM is a bit is a bit far from the high, if that makes sense. And so coming into the day here, this is 1800. We don't have an established high of day, right? You just have this swing high. All you have is the swing high as the high of day, and we tap into the gap right here, 2200, but we fail to reverse. And so what do you get? What signature do you get when you fail to reverse? You get an AMD reversal, right? So you have accumulation manipulation that we distribute higher. When we fail to reverse from a key level and we consolidate, and you have high conviction that we're still going to reverse, then we need to resweep the consolidation lower, consolidation high, before we reverse the other way around. And so we do have this. It's only a single PSP right here. YM closed bullish and Q closed bearish, right? But if you want to consider like this SMT right here, it's a small gap. Technically, it's an SMT, but I don't like using SMTs like this. SMT feels like this. I like using them when there's only one gap, right? And so you technically do have that SMT, but there is also no strength switch. But if you were looking at this, and this is supposed to be the high of day, you could have taken this. You could have taken this CSD higher, but it's just a bit sus for me. I don't like this deep retracement. I don't like these signatures that are being printed, and that is why I didn't exactly take this CSD to trade higher. But we do have this strength switch here, right? So you see how NQ is trading deeper, and NQ is the one that is closing bearish, right? Now you have an SMT fill where it's the other way around, and this is actually coming back to one of my lectures earlier. First off, we did have let me pull up both charts. First off, we do have this 15-minute gap, right? This 15-minute gap right here, and the 15-minute gap failed to deliver. As you can see, there's no SMT. Now we have now after that we move on to the 30-minute gap, and we have this kind of 30-minute sequence right here, where as you can see, YM traded below this low and there's no gap, right? And as you can see, NQ is not trading into that gap. Now this is concerning me for some reason, for a couple of reasons. Just because if you look here, this is a deep retracement on YM, so I was expecting this to kind of just consolidate. But what I do know here is that it cannot sweep this low anymore, because this is a protected swing. You already know this is low of day, right? And so what you could have maybe gotten was NQ resweeping this gap. This was I was kind of concerned. I didn't like the deep retracement on YM, but we did get that signature off of the 30-minute SMT fill, which is this. Ideally, yeah, you could have taken this as well. This CSD higher with your stop here. I would have set my stop here at the body, and it would have been stopped. I'm not gonna lie to you, but I didn't like it just because this is all just consolidation. And then if you look at the time, actually, it's 3:42. It's the last 15 minutes of the candle. If it has to go, it's gonna go. Otherwise, it's gonna close as an hourly gap, and it's gonna close as an hourly gap, and it's just gonna deliver from there. I'll get to your guys' questions after the recap. And also, I wanted to see kind of a stronger CSD on NQ right here. I wanted to see a close above this. That's why I didn't take it. And so we got that hourly SMT fill. Now, if this hourly wouldn't have delivered, I would have waited for the 90-minute. But when you look at the 90-minute, there's actually no gap. And so we're delivering. We failed to deliver from the 50-minute gap. So now we wait for the 30-minute gap. The 30-minute gap did give a bit of a setup, but it was just consolidation. It was a bit lower probability, and it could have swept you at any time. And so now we wait for the hourly gap, right? Now we wait for an hourly gap. And so after that hourly gap, you see this SMT fill. This is a strength switch, as you can see, where NQ is trading very deep into the range. NQ is the one that closed bearish, and now NQ is the one that's not filling the gap. And now you see YM, the stronger asset, is the one that is filling the gap right here. Right, you see 4 a.m. low, didn't sweep that, and that is a strength switch, right? Because NQ has this deep retracement lower, right? If we want to expand higher on all three assets with the same energy and the same volatility, this asset that is previously stronger with a deep retracement needs to have a strength switch, right? This needs to have a strength switch here. You need NQ to be stronger than YM because YM is already very high here in the range without this deep retracement. And so it doesn't need that strength switch. It's going to go high up either way. But NQ here, it needs a strength switch to trade higher. So after that, SMT fill, I took the 3-minute CSD. What the hell? I'm going to close that for now. I took this 3-minute CSD. And I have my stop here. I have my stop below 50% of the wick. It was either there or I refined. I can't really remember. I don't think it matters a lot, but I took it to this high. Oh, wait, it was supposed to be a 5R, so yeah, I think I did set it at the body. Yeah, it was a 5R, and so I held it to this high. I took one. I was in this with like 3 contracts, if I remember correctly. I took one off at this high, and then I took the rest at this high, and so that was my first trade. And we're profiling the daily profile with an open. So first we open right here. We form the low, the protraction phase of the day. Although this one I didn't like just because it had a deep retracement. But as soon as we get that strength switch, I was fine with the deep retracement. And I was very sure, I had a lot of conviction that we're going to go to these highs. And so now after this, we have open, low, that's protraction of the daily. And now we should just expand higher. And so my next trade is just basically a continuation higher. So coming in here from 9:30, right? This is asset synchronization, where this and also an advanced premium discount sequence where, so you can see NQ is perfectly at EQ of this range, while YM is below EQ of this range. Now this is the exact same logic that I had earlier with NQ and YM, simply because now YM is having this deep retracement with the sweep of the lows. Right? And so now you need a strength switch so YM can resync and trade higher as well, if that makes sense. So because YM had this deep retracement, it's the exact same as NQ. NQ had this deep retracement, so you need a strength switch. You need NQ, or the asset that had the deep retracement, to have a strength switch, and this is exactly what we get. We get that strength switch for the asset that retraced deep, and now that just played out exactly like the YM trade. So now YM is the one that is retracing deep and taking this low. And now we need a strength switch, and that is exactly what we get right here. As you can see, YM didn't sweep this low. That is your strength switch, but NQ swept the low. And so after this, I took NQ. Obviously, you take NQ here because it is the strongest asset. I was a bit late to this. Ideally, you take this CSD, but I took this this gap instead, and I have my stop at the body. I was targeting this high for a 4R. Now, we have denoted that you need a strength switch for the asset to resync, but I want you guys to study this whenever you're in a trade. So you want to see here how you get that strength switching, right? I want to just point this small detail out there that I want you guys to notice and appreciate when you're trying to enter trade. So you see how inside of this range, YM was YM here was sorry, excuse me. YM here is the one that is resweeping and filling the gap. So you can see NQ creates a gap. Where am I? NQ creates a gap, doesn't shrink to the gap. And see how YM is weaker here. Now let's take a look at the lower time frame signatures, right? Let me get to that point in price. So you see how right here, where both assets are expanding higher, but I want you to look at this, right? Where is it? Where is it? You get strength switch signatures even as price is trading higher. So you can see here between NQ and YM, you see how we're getting, wait, where is it? Yeah, so exactly. So you see here, right, where right at this phase of price, I want you guys to focus on this particular, not phase, area of price, right? So we're going to circle that right now. All you guys still know that this is above EQ of the range. on NQ. So you see how we're overextended, like we're in the premium of the range, while in here, in that particular phase of price, which is at 5 a.m. So NQ was in deep premium, but if you look at YM, it is still below EQ, right? So what do we get with the asset that is in premium? It needs to be weaker so the asset that is in discount can catch up, and they can both go to the same draw at the same time. So you see here is just a small detail that is really fucking amazing. I just wanted to point out here. Just because when you start to notice these signatures in price, as I was in the trade, I was noticing these signatures, and that is what gave me confidence that we are going to trade higher. So when you're in an expansion, trade, and you see price strength switching like this is basically confirmation that you're going to expand to the draw, just because both of these assets are giving way for each other, right? They're one asset, this asset that is very, very strong, that is in deep premium, is switching temporarily as the weaker asset, right? And you see here the asset that is still in discount with the same draw is now switching to the stronger asset. So you see how immediately after that strength switch, we expanded higher, right? We expanded higher, and even here, right? Even here on this 9:30 trade, if you look at the trade that I took on 9:30, we're gonna drop down to the 1 minute just so we can be a bit more specific with this, right? So you see how, sorry, you see how YM is the one that is obviously weaker here, right? YM is obviously the weaker asset, and Q is obviously the stronger asset. But you look at how these candles kind of move, right? So you see how after as we're opening 10, we're expanding higher. Now look at this 9:59 candle. Like look at how small it is compared to this one in 9:59. With this YM 9:59 candle, you have it closing above this high, while at NQ it's not closing above this high. But that doesn't mean that NQ is going to switch as the weaker asset. It just means that NQ is allowing YM to move higher as well, and you kind of have this advanced premium and discount sequence right after the trade where NQ resweeps this low and YM stays above that low. But YM was the weaker asset overall. So what's happening here is that NQ is temporarily switching to the weaker asset, while YM is temporarily switching to the stronger asset, so that they can be in sync, so that they could both expand higher. And that is something that I want you guys to appreciate in price when you actually dive very deep into strength switching, and you guys start to notice these little things that are happening as we expand. These things give me confidence in price as I am inside the trade, and these things are basically what confirm expansion for me. That's a little bit just a sneak peek into the strength switch lecture that I am going to deliver. Now I want you guys to study this. Whenever you guys are in a trade, you look at the lower time frame signatures and look at the signatures between the weakest and the strongest asset, and you guys will notice that even in the lower time frame, they switch strength to allow for each other to catch up. And this is what I mean when I say you get the strength switch on the lower time frame sometimes. That is something I want you guys to appreciate for when trading expansions like this. And so yeah, that's going to be my recap for today. I hope you guys picked something up from this. Yeah. Hey, what's up guys? I'm gonna be recapping everything on oil today. Coming in, I took 4 trades. I took a loss, which was, I know my loss was low-key invalid, and I should have taken that, but I'll tell you guys why I lost the first one anyways. So coming into today, first off, you have 3 days of consecutive expansion higher, and we have this huge gap on oil. And so I wanted to look for shorts, but we open up here, and immediately we trade higher. Where's open? This is open. Immediately we trade higher, and there was no established low of day. So I wanted to look for shorts to low of day, although if you long to this, I don't think it's such a bad long. It's just that I don't see the narrative behind it, just because I wanted to short instead. But maybe we're just using this high to deliver lower. And there was no 2 stage at the hourly, but if you look at 30-minute, there's a 2-stage, right? Where there wasn't really a strength switch, but all assets expanded lower. So, in my opinion, that is fine. And so if I look at the midnight open 30-minute candle, that is the highest candle here in HO. But if you look here, it is not the highest on RB and on CL as well. And so you get some sort of sequence like this, where this is a PSP. Although there was no strength switch, if you want to consider the fact that, as you can see, HO here is kind of the middle asset in terms of strength to the upside. And so if you look, CL swept this high, but it was just a minor sweep, right? And if you look, HO is a bit above this high, right? Given that we are trading higher. But RB is like miles above this high. So RB is the strongest, HO is the middle, CL is the weakest. This is an SMT break in a way. However, there is no SMT at the high, but we broke this SMT here, and we swept that, and that is kind of what triggered the expansion lower. And then after that, here is where the strength switch occurred on the 1 minute. Let me clear this up so it's clean. We got this strength switch right here between RB and HO. Oh yeah, actually I took RB, not HO. So we got the strength switch right here. So you see how RB is the strongest asset, being like miles above this high, right? While HO is the middle. RB already established that. And then you have this strength switch SMT fill here. So you can see where RB, the strongest asset, is not filling this. Ideally, I should have taken CL here, but I just took RB. I was walking, right, to pick I was on my way to pick my brother up here, so I wasn't really looking at charts. I was just staring at it through my phone. And so my first idea was that I wanted to short, but I'll show you this winning trade first. Actually no, I'll show the loss first. So the first loss was an HO. We had this kind of SMT fill right here. Where is it? I think, yeah, we got this SMT fill right here. Let me take you guys back to that. I think you hear the fan. I want you to hear the fan. So as you can see, first HO here, we got a 50-minute SMT fill, right? There was a gap on both assets, so that's fine. Although there was no strength switch, right? Because this is still the weakest asset, and it is not the one that's filling the SMT. I would rather have preferred this one filling the SMT, and CL and RB not filling the SMT, or at the very least, I want this one to be the one that fills the SMT, not the one that's failing to make the SMT. And then I entered here, which was fine. So I took this CSD lower. I took this wick retest, and I had my stop above here. I was targeting the 1800 open, or the low of day, the current low of day. That's what I was targeting. And then I got stopped out immediately after that. Now the problem why I lost this trade was that given that CL and RB are the ones that filled the gap, so given that they are stronger or else weaker to the downside, right? So HO here is the leading asset to the downside. These are the lagging assets. Ideally, you want them to CSD faster. If you don't get the strength switch with the SMT fill, if you don't get the strength switch with the higher time frames, you need to look for a strength switch on the lower time frames. And that is what you don't get. Ideally, as the last resort, CL here is the one that CSDs with more energy than HO. And ideally here as well, RB also CSDs. You could have taken this as well, as long as all three assets CSD as a last resort. And so we didn't even get that CSD. We got the 5 minute, but we already kind of talked about how you want to get the bulkier CSD if you don't have the most conviction. You can only take this if you have like the most conviction of price. So if there was a strength switch, I would have taken this, which was I'm sorry, excuse me, which was fine, right? But ideally you want CL here to CSD as well, given that CL is the lagging asset. Ideally CL makes a more energetic CSD than HO to the lows, or at the very least CSD as well. But given that this failed to CSD, I should have waited for that as well, and that was my mistake. That was why I got stopped out immediately here. And so after that, we did get that SMT fill, which was right here. Right here. So this got this 1 hour SMT fill. Now here we don't actually reverse immediately from the SMT fill, which is what I wanted to talk to you guys about. It's a really good lecture. See how we're getting this kind of deep retracement on CL and HO, but we still don't have that SMT fill. So as you can see, when the 3 p.m. candle swept the hourly, we got that, right? We got that SMT fill right there. We already got that, and ideally you could have entered this. There was no problem with that. It's just that we're trading higher and we're consolidating, right? I wanted this to kind of CSD lower as well, given that we're just trading higher. So I was expecting RB to break this SMT, but I just set an alert at this CSD and it got triggered, and it was fine for me to take this trade because since we failed to reverse off of the gap, what we have is we have an AMD reversal, right? And you don't need to wait for the 90-minute to close here because, well, for one, the 90-minute doesn't even make a gap, but we do have that sequential SMT still in play. In fact, it is actually a two-stage right here that kind of played out, and that was what it was waiting for. And once we got that SMT fill broke, and so we're just waiting for this 90-minute sequential SMT. At the same time, it is also an AMD reversal, right, where price refuses to reverse from this 1 hour gap. Price refuses to reverse from this 1 hour gap. So therefore, we wait for either a key level above it or wait for an AMD reversal. So technically, this is an AMD reversal. And so once I saw this huge down move and all assets CSDing and a strength switch where HO, the strongest asset, is the one that's not filling the gap and making the two-stage and the sequential SMT, and all assets CSDs lower, this is a very high probability trade. So I just took this. I didn't even need a retest, stop at the high, and I was targeting this low. But ideally, I should have taken CL here. It was the most ideal setup, right? It would have given me more R as well to the lows, right? It would have given like a 2.4 R, but I TP'd when CL hit the lows anyway. So I entered there. I TP'd when CL hit the lows. I TP'd when 410 hits, right? 410 hits, and I TP'd right there. And so that was my trade. And so my next trade was, I believe it was, let me find it. I believe my second trade was actually a long. Yeah, my third trade after the loss, and my second win was a CL long. So I longed CL to these highs. Now take note, I don't really like longing to the highs, to the intraday highs. I don't think it's a high probability target, but given that we are showing signatures, but essentially it's just this, right? First off, I can't short this because I don't like shorting when there's a wick like this. I would rather wait for it to be an old wick. And we got that C2 reversal textbook. Now 6 a.m. should just deliver higher. And after that, we do have this sort of two-stage, where as you can see, CL here is sweeping the low of day. Right? CL is sweeping the low of day. And CL is not making this sequential SMT higher. So as you can see, the asset that doesn't make the low of day is actually the one that is sweeping this low. Right, as you can see that. Ignore the background noise. Sorry, I'm on call with my best friend right now. So after that, we got that two-stage strength switch, right? And when I saw this, ideally, I don't want to long this, but when I saw this C2 in the 4 hour, I was like, we're going to continue the trend to trade higher. And so simply what I did was that I just wanted a strength switch because strength switch does confirm reversal. So you have this first CSD here, and then we get some sort of strength switching, where as you can see, we also have this sequence right here, where this is your strength switch. Yeah, you can see this got swept, and then this got swept as well. This got swept as well, and then we had another sweep to the lows, given the fact that this is the strongest asset. This is the asset that had the failure swing to the intraday, failure swing SMT, while CL, the asset that is sweeping this relevant low, is the one that is not that is stronger on this move, given that it's making the 90-minute sequential SMT. We have the two-stage, we have the strength switch, and all assets are CSDing higher. It should all be aligned. I took this CSD higher, but this was too high for me. I'm sorry. So I waited for a retest on this wick, and so I took that, had my stop below this breaker, which I almost got stopped out, by the way. I had my stop like somewhere around this area. I can't really remember, but I TP'd at the highest. It was a 2.5 hour. Oh yeah, I had it here because it was around a 2.5 hour. So I had this, but around 50% of this wick. Yeah, exactly, 2.5 hour. I entered that. Now I want you guys to notice here, right, that when you look at HO, given that after that signature we actually did drop lower. So let's compare this. So first you have CL. Oh, where is it? So you have CL here, right? You have CL. So you see how we're kind of decoupled on this move lower, but as soon as uh HO, every time HO makes a move higher, this also moves higher, right? The fact that we are getting this slow lethargic grind higher is because HO was expanding lower. Think of it as, because HO was expanding lower, this asset is being pulled. So essentially, they're in a tug of war. So CL and HO were in a tug of war during this move where HO is tugging CL lower while CL is pulling its own weight higher. It just depends on which one is stronger. So either HO is stronger to the downside or CL is stronger to the upside. And that is why I just kind of set it. Low battery. That is why I kind of just set my stop break even as soon as I saw this moving lower, because at any point in my trade, HO could have had the stronger pull lower, and that means CL will probably just follow lower as well, and then we'll get the long signatures after CL takes this low. But luckily, I didn't get break even, and price just hit my TP straight away. And you see how they're just in a tug of war. And during all this, look at how RB was moving, right? It was consolidating because RB is, in this scenario, RB is the middle asset. And so HO and CL were basically just having a tug of war, but CL won the tug of war. So CL was stronger to the upside than HO was to the downside, if that makes sense. So in this scenario, HO was weaker to the downside than CL was to the upside. And you see why you need asset synchronization. You need both assets to have the same upside move, rather than in this scenario HO was pulling CL lower, and that's why we got this lethargic move, but it could have stopped me break even at any time. And finally, we have my last trade, CL and HO. It's basically this. So HO got this 15-minute SMT fill first, right? If you look at let's go back to looking at the triad. First off, you have CL above this high, and we have this strength switch between, I'm sorry for the background noise. We have this strength switch between the two. Actually, it's a two-stage SMT fill. But if you look at the hourly here, we had a large wick. So I wanted to wait for 11 to present me something. I need this to load. I wanted to wait for 11 to give me something. It's not loading. So you see how we have this fat wick on 10 a.m., right? And this is just basically expanding higher. And also, I just wanted to wait for 11. And at 11, we did get that sequence where we got the SMT fill again. And I know I took the asset that also swept the low. But ideally, we still got that lagging asset, right? Where HO, the lagging asset. So you see how HO here is the second strongest, and RB is just is the weakest in this scenario. So they switch strength again, where you see how close 11 a.m. is opening up to the high, while RB, the 11 a.m. open, is a bit farther from the high. So HO is the strongest asset here. So even though RB swept this 30-minute low, it's fine, because HO, the lagging asset, still didn't take this. And if you look at the 3-minute signature here, right, you see how RB CSD'd first. So we CSD'd here at 11:03, while RB didn't CSD at 11:03. So that is your lower time frame strength switch, right? That is your lower time frame strength switch, where HO, the asset that is closer to the high, is not CSDing yet, and RB, the asset that is farther from the high, is making this faster CSD. And that is one of the criteria for strength switch. If you guys watch Afi's strength switch video, Afi's lecture, he had it in one of them. A faster CSD is a form of strength switch. So we did get that strength switch between RB and HO, and I entered off of this. I have my stop at the body here. But even though I TP'd when HO took the high simply because of the proximity to the highs. We still have this kind of farther jaw to the highs. I didn't expect this asset to get to the highs as well. And so that is why I TP'd as soon as HO hit the high, just because it's an SMT break. So CL is taking the high, but it's not reversing. So we may reverse when HO finally takes the high, given that we have 3 consecutive days of higher expansion candles. So I can't really expect RB to kind of take the high here as well. And so I just TP'd when RB hit the high. And so yeah, those are all the trades I took. In my opinion, indices are kind of trash right now. There's really nothing to take. And so yeah, I hope you guys learned something more about how strength switching works in the lower time frames, and how assets strength switch to give each other room to move, and as well as asset synchronization. So if you guys have questions, just add me in the chat. And I want you guys to study today's price action on oil, as it is a very interesting case study for today. And so yeah,